All right. Hello, everybody. Welcome back to the channel. I am here today with Mr. Tanner. We'll have a couple of other people joining in a little bit. We've got Tesla earnings on deck. Going to be a big
It's an
one.
exciting one.
We also got ServiceNow, IBM, a bunch of different companies. ServiceNow really big for the software space. Tesla, obviously, it's freaking Tesla. Mag 7, important one. Thank you all for being here. As Steve says, we're late. It was Tanner's fault. It was not my fault.
No.
It actually was my fault because I kept asking Tanner different questions. But Tanner, what are you feeling before we get into it about this bull market? I mean, seems like the bulls are back.
It does seem like the bulls are back. I'm getting pretty excited. You know what's so funny is, well, I do want to listen to Elon. I cannot wait for ServiceNow earnings. Like, I don't know how you want to break out the earnings if we want to listen to the beginning of ServiceNow or not at 5. But I'm really excited to hear what Bill has to say because he has a lot to prove right now. And I think that's going to be a lot of fun. But obviously, Tesla is always great earnings every time. Or well, a great earnings call, I should say.
So Tesla's at 5:30, so that's a good idea. We'll start listening to ServiceNow at 5 because I do have a lot of people, I think in both of our audiences, that bought the ServiceNow dip or the software dip in general. And so ServiceNow is going to be really important for that. And then 5:30, we will switch over to Tesla. Sam, what's up?
How are you, sir? What's going on?
I am doing well. Obviously, a green day. Sam, let's start off with you. We got Tesla coming up. Raw thoughts on what you're expecting for Tesla.
Dude, honestly, the bull market's going to follow with all these mega caps. It's very difficult to say, okay, Tesla's going to go up like 20% because seeing the momentum of the market, it has had a lot of a run up lately. I don't think they're really going to say anything on the call that's going to be like a game changer for Tesla. For the last few earnings, it's really just been an option selling event. Just basically flat, like 1 or 2% up or down on Tesla after earnings is nothing. Right? You're going to have a lot of that options decay and IV crush happen very quickly. So this is the reason why I never play Tesla unless like you're selling options or something. So, you know, I hope it comes to the call and says that he's going to continue the Model X because that would be really nice. So I can hopefully get the next one that comes out. But other than that, man, my car's in the shop right now. So if he gives me an update in the earnings call, that'll be great.
Tanner, you sold, you were very heavy in Tesla originally. You sold a year ago. You made NVIDIA you took that money, put into NVIDIA. Obviously, that was a much better bet. NVIDIA was cheaper. NVIDIA has vastly outperformed. How are you thinking of Tesla as we get into these earnings?
If I remember correctly, Elon said in Q3 earnings call that Q4 and Q1 were not going to be very strong, and then they would look to reaccelerate. So I think that we're going to see earnings that reflect not outstanding numbers, but hopefully, like usual, Tesla investors are focused on guidance. I'm super excited to hear more about Terafab and what they want to do with this. So hopefully it's there's a good amount of time to talk about things that are not just related to the car business, but about Optimus, about the Terafab, about these sort of things that I think is also going to be quite exciting. So in general, for the markets, I'm excited to hear from Elon. But for Tesla, I don't think anything said is going to turn me bullish just based on the current valuation right now.
I would tend to agree. I don't think the numbers are going to be that interesting or that important. And for the past couple of years, they haven't been. But given the SpaceX IPO, given the excitement around compute constraints, given Optimus, FSD, all the physical AI elements of Tesla, once again, Elon's going to have to paint a story. And hopefully that story is a bullish story that continues to get the street to believe in the vision. And even if it takes time for that vision to manifest, at least that vision is there. That's what people are betting on. And I think that's what we're going to have to see today, hopefully from Elon on the call. Jose, what's up?
What's going on, guys? That was everything. Hey, Tanner. Hey, Sam.
I don't know if you have the right mic set up right now.
Oh, give me one quick second.
Okay, while Jose is getting set up, Sam, ServiceNow, are you in this? And what do you expect from them?
Let's go. Let's go. All right. So, I bought the dip on ServiceNow at $86. So I got a little bit of cushion coming into here. I've always said that I don't like to catch falling knives, but things kind of change when the market kind of just turned around, right? So if everything is in a bullish state, if everything's in a bullish trend, that's when you kind of want to buy dips on leaders in the stock market. But when things are in a downtrend, that's when you kind of want to avoid it and stay a little bit risk off. But dude, honestly, I've been pointing out that IGV SOX ratio for a long time, like for months now. I've been showing a massive downtrend that SOX is completely outperforming software. And you know who tweeted today about that ratio? You ever heard of Warren Pies?
Yeah. Good macro guy.
Yeah, dude, that guy posted about it today. I'm like, holy cow, I'm not the only one that's been watching this. So we've all known that Anthropic and all their models that are coming out is very bearish for software in terms of how the market's reacting. But what have we been seeing for like the last week, right? All this growth in terms of the model's productivity, and then software just ignores it and continues to go up. Like that is the indicator. When you have bad news already priced into the market and the market still goes up based on bad news, that means the market is bottom. It's the same thing for sector specific as well. When you have like the worst news possible come out for software and software continues to ride up, I think that pretty much means at that point that the worst is price state. Now, is ServiceNow going to blow up and go back to $200 at like 18 times EV NTM sales? I don't know if that's going to happen, but there definitely is a good mean reversion play happening here.
Two quick things. First of all, Tanner, congrats on Micron. This bad boy almost touching 500, 487 right there. So very cool stuff. I know you bought it on the last earnings and kept buying the dip.
Yeah. It's a recent buy for me. I definitely don't deserve the congratulations the way other investors do, but yeah, green on every buy so far, like every other investor.
Well, there is one investor that does deserve the congrats on this stock. I said I would ring the bell. I was waiting for someone
303.
to be here.
What the heck?
It's about
to ring the
$300
bell.
baby.
Ladies and gentlemen, congrats on AMD 300.
The bell's good luck, right? Right, guys? Right, chat? The bell's good luck.
Most
Chat, tell me it is.
Usually. Jose, before I get your thoughts on Tesla, what do you think about AMD?
I mean, pretty exciting. I mean, you have the CPU shortage. You have kind of the excitement of the MI450. Obviously, the portfolio is doing good.
I just want to say, hold on. We hit 304 after I rang the bell. So for everyone who gets mad at the bell, there you go. The bell was not the top. Literally was not the top. Okay, go ahead.
I'm just gonna say, the higher things go, the scared I get. The scarier I get. So things are looking really good right now, but I'm pretty excited. I mean, I'm excited for earnings. Like Tanner mentioned, even with Tesla, I'm here more because Elon has made this massive shift recently where he's like back on grind mode and grind mode on AI solutions, on kind of the chip now with the terafab. So to me, tell me about the vehicle, sure. Tell me about robotics. I really want to know what's going to happen with terafab. We have Intel tomorrow with that random partnership that we didn't really get a press release. What's going to happen there? What's happening with XAI? They just announced. It's just so much that I hope he spends 10 minutes on Tesla and the other 50 minutes just talking about AI and everything else.
Yeah. SpaceX AI acquiring Cursor. I didn't hear Amit's take from this morning. What did you think?
I think they got to pump up that IPO.
But what do you think about that? Not just SpaceX. Do you think that says anything about the state of AI?
Look, they're doing $2 billion in revenue, so Elon's paying 30 times sales. I think he's buying the talent more than he's buying the product. Maybe he thinks he has enough compute. He can pair it with Grok and then pair it with a workflow like Cursor and then actually compete heavily with Claude Code and Codex. I just don't think 60 billion makes sense for a company that's about to raise 75 billion in their IPO if it's successful. Like, I don't know. It is weird, but we've got a lot of weird stuff going on in the markets. Beyond Meat, Newsmax came back. I mean, a lot of different stocks hitting some momentum, but like a Micron with a forward PE of 7 is not euphoric. And AMD, which a lot of people felt should have been 300 for a long time, I don't know. It doesn't feel the most euphoric to me. $500 billion company at this point. IGV still down year to date. SMH hitting all-time highs because the neoclouds and all those different semiconductor names are getting momentum. Marvell with their rumors on working with Google TPUs. Like everything that's running, as long as it's not like a small meme stock, seems like it has a reason to run, which keeps me more optimistic that this is more bullish than bearish. Now, CAR never had a reason to run, and there you go. Nice little 40% decline on car. See, this is good. This is bullish, guys. If you bought at 800, I'm sorry, but you don't want to see stupid shit go up 8x in 3 weeks.
Yeah, you're seeing a car crash.
Yes.
Nice.
Basically. Okay, I put the poll in the chat. We got 3 minutes. So if you're new to any of our streams right now, as soon as the market closes, we're going to get into all the earnings. We're going to try to get all the numbers. Some of us might have numbers before other people, so they're going to save them. We'll try to get the coverage. Obviously, Tesla's priority, but ServiceNow is a big one today. And then we'll talk about the other companies. Which one do you guys think outperform? I'll start with you, Sam. Tesla, ServiceNow, or IBM? Which one has a better price action after the bell?
I have to be honest. I think it's going to be, I don't think it's going to be Tesla. I always think Tesla's an option selling event. I don't want people making moves because of what I'm saying. It's just, we've seen just the probability wise that Tesla usually just an option selling event for earnings. I think it's either going to be ServiceNow or IBM, but I haven't actually seen how IBM's performing lately. And I think that's probably something that a lot of people are not really too keen on, but IBM is definitely very important in terms of software and infrastructure. So they did purchase HashiCorp, and I believe they did purchase Confluent as well, right? So they're starting to lean more into this software part of AI. And if ServiceNow does well, that is also beneficial for IBM. But I mean, your guess is as good as mine. I'm hoping it's going to be ServiceNow. That'll be amazing.
We also have Lam Research, Southwest Airlines, QuantumScape, Molina, and Texas Instruments. So we do have a bunch of other companies that are reporting today. Jose, which one do you think would outperform?
Yeah, out of those three, I haven't heard much from IBM. So usually the one that gets the least attention is the one that's going to give us the most reason to pay attention later on. So I'm going to go with IBM on this one.
Okay, Tanner?
Can I pick ServiceNow? Is that on the list?
Yeah. You think ServiceNow is going to outperform because you think they're just
well, I don't think any real material I don't think anything's going to draw the stock down right now. So if people are fundamentally driven during earnings, then there's a chance for it to run up. I'm not saying over the long term they're going to outperform because I think those jitters will come back in. But during earnings day, I think that they could definitely post better than expected earnings and get a little bit of excitement after hours.
All right, folks, here we go. 20 seconds into the close. It looks like the S&P will have its highest close ever in history. And we're all going to be here together to experience it. In about 5 seconds, look like we're getting that close at 7:11. There it is, 4 p.m. The stock market is closed. S&P all-time high on the close, 711.21 as we head into earnings. All right. And now we wait. S&P ended at 711. NVIDIA ended, wow, 202.50. I think this is the largest NVIDIA close ever as well. There you go. AMD, 303.46. First close for AMD ever above 300. Tesla ended at 387. We'll get the results in about 5 minutes. Salesforce, 189. IGV, 88.80. Broadcom, all-time highs as well. 422.50. Microsoft 432. This thing was at 350 at one point a couple weeks ago. Palantir ended at 152.62. You had Meta 674. Amazon just below 256, 255.36. Not too bad. The Googles, which had a bunch of announcements today at their event with NVIDIA, 339, just below 340. Not too bad. Lululemon appoints former Nike executive as new CEO. Okay, that's your first headline after hours. Lulu up 2%. Getting a Nike executive, Nike basically flat after hours, and Tesla, ServiceNow, Lam Research, IBM, Southwest, and QuantumScape are on the deck for earnings. Yeah, Rocket Lab also a great day. Rocket Lab right there, 90, ASTS, 84.66. That's up 5.81%. Navitas, I don't know why this thing ran up today, but it did, up 20%. That one was a big move. And then you have
Instruments is already out. Beat on EPS by 24%. $1.68 is what they got. They were only expecting $1.36. Large beat there. EPS is up 31% year over year.
That's
Revenue,
a big one.
Yeah, revenue also beat by 7%. $4.8 billion. Revenue grew 19% year over year. That's a big, big win.
Dude, we want to see them beat on EPS because that means that margin efficiency is going up, and maybe it's due to AI. Look at that.
Stock's up 5% right now in the after hours.
Go. That's a power analog, power management and analog semiconductor stock. So that's going to move with On Semiconductor. That's also going to move with Navitas. Let me see if Navitas is up after ours.
They also beat guidance.
Really but yeah.
Street wanted 4.5. They came in at 5.4 billion. Wow.
They also do calculators, guys.
That is also
okay.
You had to slip that one in there.
I thought someone was going to laugh. That was just a pity laugh. That was all right.
Okay, Tesla, little bit of a move. We don't have the numbers yet. I think Tesla tends to take a couple minutes after the bell, so we'll see. Tesla 1%. Put in the chat, by the way, if you're heavy in Tesla. Oh, we got it. EPS is a beat, 41 cents versus 34 cents expected. Gross margins, that's a beat, 21.1 versus 17% expected. Overall EPS, 13 cents versus 12 cents year over year. So they beat on EPS, they beat on margins. I don't have the revenue numbers yet, but I imagine that's probably not horrible. That's not bad. That's a little bit of a beat right there on EPS. They haven't beat for the past couple quarters, so the fact that they're even beating, I think, is better than not. 41 cents versus 34 cents.
Yeah, having a good move.
Yeah. Outside of Tesla, I did see some other numbers for Texas Instrument reported. I just see their second quarter guidance. They beat expectations by about $200-300 million, which is pretty good for the analog side right now.
Yep.
Yeah, that one crushed. Tesla 3% is going for 400, folks. Revenue 22.3 versus 22.1. Elon gets the triple beat. Elon gave you the triple beat.
Wow.
EPS beat, gross margin beat, revenue beat. Free cash flow also. What was the street thinking? The street thought they were going to do negative 1.86 billion. They came in at positive 1.4. The street got that bearish on Tesla. They thought they would have negative free cash flow. That is a quadruple beat, folks. There you go. 5% on Tesla. ServiceNow is kind of flat. Stock's down 1%. Don't have the numbers yet, but it's down 1%. Texas Instruments up 8. Tesla up 4. Lam Research flat. Don't have their numbers yet. IBM flat. ServiceNow also down about 1. Okay,
by the way, Texas Instruments very close to the close was at an all-time high. So they are skyrocketing above all-time highs right now, up 8.2%.
There we go. Let's go.
While we're waiting for ServiceNow and more Tesla, here is Texas Instruments.
Is extremely strong. This is an analog chip company exposed to industrials, auto, and now data centers. They posted EPS, earnings per share, of $1.68, higher than the street on revenues of $4.8 billion. Last quarter, they missed on revenue, so that was a strength there. Their Q2 EPS guidance came in a range of $1.77 to $2.05, much higher than the $1.57 the street wanted. Same situation for their Q2 revenue guide, coming in much stronger than the street anticipated. Although the company did speak at a TMT conference back in March, saying that they did see some strength in automotive, specifically within China. They said for this particular report, they saw the strength come from industrial and data centers. So those are the two drivers for this company. And on the call, we should be expecting more comments about a reduction in CapEx, which
Lam Research beat by 8% on EPS, beat by 1% on revenue. 5.84 versus 5.7. EPS is up 41% year over year. Revenues up 24%. We'll get ServiceNow in a second. Here's the update on Tesla.
Is a beat on the top line, or on the bottom line, I should say, from Tesla, earning 41 cents a share. The street was expecting 37 cents a share for the first quarter. Revenue coming in a little shy of expectations at 22.39 billion. The street was expecting 22.64 billion. We're just starting to go through the release in terms of any data points, but one that stands out is that Cybercab and semi-truck, the Tesla semi-truck, volume production on schedule to start this year. We're going to dive back into the release in hopefully have a little bit more in just a little bit. Melissa, back to you.
Yeah, keep us posted, Phil. Thanks. We're seeing that stock react.
Okay.
I mean, on schedule is like a beat for Tesla.
100%. Yeah, this one losing 400 now, 399 after hours. Got to see if it can hold. ServiceNow, where are these numbers, bro? None of us have these numbers. I don't see it yet.
I don't see that. I see Lam Research though.
Yeah, Lam Research is out.
Yeah, they crushed 8% EPS beat, 1% revenue beat. Yeah, I don't see it on their website. Yeah, guys, we don't have ServiceNow. We got to wait. We have to wait. Lam Research up 3. Dude, this is a $330 billion company. I didn't know that. Jose, you own this one, right?
No, I don't own many equipment players anymore.
The headline for ASML, by the way,
I follow it a lot, though.
TSM said the ASML's equipment is getting too expensive for them to use. That's why that stock was down 2% today. I imagine they'll work something out, but
did they really? Who else are they going to use? What else?
Well,
are they gonna use?
Yeah, that was the Bloomberg headline. TSM, ASML's new equipment is too expensive. It's like, well, who else makes these machines?
That was the dumbest news ever. So ridiculous news.
Kinder Morgan, I don't know if people track this, but they beat by 23% on EPS, beat by 6% on revenue. This is your upstream pipelines. It's good to see a lot of different companies that are diverse are beating. There you go. KMI, that's up. Revenue's up 40%, EPS is up 14, or EPS is up 40%, revenue's up 14%.
IBM is out now. Double beat once again. Revenue beat by 2%. 15.9 billion of revenue. EPS $1.91, which was a beat by 6%. EPS is up 19% year over year. Another great one.
Okay.
Dude, what if earnings season is just a slam dunk across the board?
Oh yeah.
Well, I think it kind of has to be honest. Right? Like the earnings expectations have gotten so high, not unreasonably high, but high enough where if they're not a slam dunk, it's not.
Yeah, but that adjusts the estimates though. You have to beat above the expectations.
That's what I'm saying. So every company has to have a slam dunk.
Yeah.
And so far, so good. But yeah, IBM right there. That one continues to do. IBM not a crazy beat, but enough where no one can be upset at a company this big beating by 6% and 2%.
Well,
ServiceNow comes at 410.
IBM's almost down 4%. So there's something else in this report.
Oh, it's down 4%. Yeah, there might be something here.
I'll check the IR, see if they have anything.
Tesla 403. ServiceNow should be out in 30 seconds.
It just came out, but I'm trying
Just
to
came
look for
out?
numbers. Yeah,
Stocks down. Stocks down.
down 3%.
Kind of. Not really. Hit 99, then bounced 101.
All right. Well, glad I didn't put any money on this, and I
Don't play earnings. Such a bad idea to play earnings.
ServiceNow, 97 cents on EPS. 97 cents were the results. They came in line. Revenue, Street wanted 3.75. They came in at 3.7. So they beat by 1% on revenue. They basically came in line on EPS. Revenue's up 22%. EPS is up 20%. I think Street wanted a much bigger beat on EPS.
Yeah, they're down 9%.
Dude.
10%.
Dude, hold on. Everyone take a hard look at this price action right now. If you own a software stock and it doesn't beat, this might be the future. The same thing for Palantir, same thing for Oracle, same thing for Microsoft. Like, these companies have to prove the narrative that Anthropic's not going to kill them.
Well, I did say it had the potential to do the best. I could have probably also said that it had the potential
Do
to
the
do
worst.
the worst.
Okay, this is kind of a 12%, really?
That's
Really?
a massive move down. A lot of software stocks are down. Salesforce is down 2.5%. ServiceNow 11%.
IGV. Oh my God, they're taking Palantir down with it. It's not even Palantir earnings. Oh my gosh.
Bam.
Can
Yeah,
we
that
just
is
kick out
terrible
all these
for the
software
software
companies from the
sentiment.
index?
Oh, so
What do you
bad
think,
for
Dan?
the software sentiment. So bad. For
Terrible
it.
for software sentiment. That's all I was saying.
Okay, I see it on the
Oh.
website. I see the results on the website.
EPS came in line, revenue beat by 1%. It is not the stunning beat we were looking for, that's for sure.
See, this is the problem. These software companies, there's only a couple that have really beat and raised. The rest of them are just barely getting along. And I think the street is like, wait a second. Anthropic went from 1 billion to 30 billion. You guys can't just string along and expect us to pay a multiple on your stock. You've got to lead this AI revolution by beating the crap out of these numbers. And this is not it by ServiceNow. It's just not it.
Well, the bar is set pretty low. So, but I am surprised at 12, 13% drawdown after already being down a lot, but it is what it is.
I mean, look at Microsoft down 0.5% on this as well. Jose, any thoughts on ServiceNow here?
It's just crazy how the market is reacting here to the software spaces. I mean, I don't expect any of these software companies to see massive revenue growth, but it's like even if these companies still grow at like single digits, their valuations right now are crazy, are insane. I don't own any except Synopsys in the software space, but yeah, it's also funny to see
14%.
Microsoft.
That's insane. Wow.
It's $88.
Murdered.
This is kind of unbelievable, but it's also not that unbelievable, right? Like,
Pull it back up. It's
15%.
still full. We're down 15.4.
That's crazy. I guess software is dead. They are murdering this thing after hours. Good.
by the way, I'm
Lord.
laughing, but I have a heavy position in Palantir, so I'm feeling the pain after hours, even
Oh,
if
you're
it's
fine.
unjustified.
Is Palantir even down that much? Is that
No,
1%?
But it's annoying. It didn't even have anything to
He
do
feels
with
it,
the
though.
ServiceNow thing. Like,
Oh man, that sucks.
yeah, this is. We definitely have to hear Bill McDermott. Bill McDermott has to get on that call today and tell Wall Street they are stupid for this.
He better go on that call and be like, I'm buying $1 billion worth of stock right now. Like, you better say some shit on there to pump his. But to be completely honest, I mean, 15%, 14% is a lot, but we've seen software stocks have massive swings after hours. So, I'd wait until tomorrow to kind of get a little bit of a
That's true.
certainty as far as how that actually goes. Like, they could literally say one thing in the earnings call and think will just flip. But,
Let's get some more coverage on Tesla, then we'll keep diving into it.
First of all, the company's operating cash flow for the first quarter, $3.9 billion. Free cash flow, which some thought might be negative, coming in at positive $1.4 billion. And then there are FSD subscriptions. Remember, at the end of last year, they had 1.1 million. It's now 1.28 million FSD subscriptions. That's an increase of 51% year over year. The company says its factory is expected to begin production shortly in Q2. And one last note, I reached out to Dan Ives because we haven't been able to calculate the gross margins yet. And we said, hey, what's the gross margins? What do you have? He has it at 21.1%. Now, we haven't gone through and done the numbers ourselves, guys, but if that holds, if it's 21.1%, that is well above what the street was looking for. 17.5%. That was the gross margin. Most people were going to say anything above that is positive. Anything below would be negative. Guys, I'll send it back to you.
That would be
Okay, we'll go a little bit deeper into Tesla for a second, but if anyone finds anything in the ServiceNow numbers to explain why it's down 15% right here, outside of the top line growth.
I'm right.
Question for you guys.
Yeah. Go ahead.
Did Tesla always report FSD subscription numbers, or is this something they started last quarter?
That's interesting. I don't remember that.
I don't remember that either. And now I would love to hear what's the retention rate on that as well, if they were to share that. But I don't know if they want.
Did they reported FSD subscription numbers?
That's
today?
what the person said it, right? They said they went from 1.1 to 1.28. I'm hoping they got it from the press release numbers. If not, where would they be?
You're right. Yeah, they did say that. It's up 51%. Yeah,
So this is the first time, right? This is the first time they said that, right? I've never heard them share FSD numbers on earnings. It's started last quarter. Okay, thanks.
Okay, cool. So yeah, we'll go through the share deck in a second. Let's try to understand the software stuff a little bit, then we'll get deeper into Tesla again. We have the call for Tesla coming up soon. Microsoft getting hit by this as well. First of all, who's buying the dip on ServiceNow? Like, who's just saying enough is enough and pulling the trigger here? IBM also down 7, getting a little recovery, little bounce off 87 back to 89. I wonder if we can make it back to the mid 90s here.
RPO from Q4 to Q1 had a slight drop for ServiceNow.
Oh, that's not good.
Although it was up 25% year over year, we just saw a very, very slight decrease. I'm going to take a look and see how that's done over time.
Yeah, I'm trying to run this through an LLM, see if it can find anything, because
because it's not even on the website.
Yeah. Oh no, it is on the website.
It is on the website.
I'm trying to find out like exactly what could be wrong with this that warrant it being down 13%. I mean, it is what it is. The market's just voting what it thinks it is, so there's nothing we can do about it. But
I got the deck. Let me see. Just quickly running through this.
let's see here.
Actually, no, that looks pretty normal compared to other Q4 to Q1s.
Oh, right. We forgot this is a transition to Q1. So that could, Fiscal year guide. Fiscal year guide is 15.7 billion. That's up 22%. That doesn't look crazy. I mean, none of the numbers look bad. They just don't look like explosive growth.
Yeah.
Which is, I think, what the street... Salesforce is down 6% because the street is getting ready to get a report just like this from CRM. I mean, there's a reason Palantir, Microsoft, AppLovin are not down that much because the street's expecting them to actually really put up some good numbers. But ServiceNow and Salesforce, and where's Adobe? Adobe down 2, Salesforce in particular getting...
Why would they sell off Salesforce that hard from ServiceNow earnings? Like,
well, because if it's going to be exactly like ServiceNow, right? Like barely any momentum, very little revenue beat, no EPS beat.
Customer renewal rate touched 97 this quarter. Aside from Q3, which this happened as well, which they included here that said, excluding the closure of a large U.S. federal agency, Q3 would have been 98%. So the fact that they touched 97% this quarter, that hasn't been done since 2017, it looks like.
97% on what? Retention?
97% customer renewal rate.
Okay. Yeah, I mean, this is taking down...
I'm trying to find anything here. I'm grasping at straws. There's nothing that it looks 12.7% down after being sold off like 80%.
Well, the ServiceNow is taking down everything. So if you're asking why is Palantir down, why is CrowdStrike down, it's because of ServiceNow.
I mean, one thing that could be happening is I was looking at the RPO and last quarter they added a lot. I think it was their best quarter and like the biggest growth. I wonder if maybe the street was expecting kind of this AI acceleration where it's like, okay, historically, maybe you don't have a sequential growth every quarter in RPO, but if the AI story is real for you, shouldn't we see what we see in like other AI companies and chip companies where historically you're cyclical, but now you're kind of seeing sequential growth. And I wonder if maybe that's what we were expecting here for ServiceNow, something where you start to get away from its normal routine.
That's fair. And they did miss on guidance. People are right. Street expected 16. They came in at 15.7. It's a $300 million miss. It's not a crazy miss, but it is miss.
I would expect that to be a big deal if it was like very expensive, because usually whenever you see software stocks selling or trading at a very expensive premium, a little miss like that can bring it down. So,
dude, look at this 81 to 105. I mean, just look at this chart right back to where it was a week ago. And if it goes lower, we're getting back to potentially March 30th lows, which were March 30th lows were 81.24. So I wonder if that was April 13th lows, but that was the worst day for software. 89.60 down 13% right here. Yeah, these software stocks have got to put up results. Southwest Airlines EPS The guide is 35 to 65 cents. It's a pretty big range. Estimates were 59 cents. Revenue, they missed by 0.41. EPS, they missed by 4%. Obviously, oil price is not good for the airline. Southwest is down 3%. IBM down 8. Not sure what IBM said here. But the street does not like it. Here's a little bit more coverage on ServiceNow, and then we'll get a bit deeper onto Tesla.
Need to dig. Bill, thanks. ServiceNow earnings are out. Let's get to those. John Fort's got the numbers. John.
Got those as well. You can see ServiceNow stock is down quite a bit, but it's not because it was a miss, just perhaps not as big of a beat as the street is used to. Enterprise software maker beat Q1 2026 consensus expectations on the top and bottom. Revenue $3.77 billion versus $3.74 consensus. Non-GAAP earnings per share 97 cents, just about in line. The company said full year subscription revenue is going to be $15.735 billion to $15.775 billion. That's 15.735 to 775, up from 15.53 to 15.57. But that includes some upside from acquisitions closing sooner than expected. I did speak exclusively with Bill McDermott before the call. He said that they're being especially disciplined on costs. He said we're going to have the same headcount running at ServiceNow to start the new year in 2027 as we entered the new year in 2026. And then the margin expansion as well as revenue acceleration will continue in a steadfast manner. First time he said that. He also found some of the issues in the Middle East that he's talked about before. They are baked into the numbers. He said because it's on-premise stuff that was affected by the war there. He said you do have an immediate impact and you're watching it closely. But CRPO, the pipeline, still growing sizably, especially deals over $1 million, deals over $5 million. He says they are confident in their plan. Guys, back to you.
John, thanks. John Fort, and we're watching a precipitous decline in the stock, Mike, down by 15% of ServiceNow, exactly, on the back of those results. It's interesting that we're starting to hear more about the impact on the Middle East.
It's literally going for new lows right now, too. By the way, is that how we sound? 51137 to 5. Can anyone put those numbers together in their head? I have no idea how to visualize that.
That's literally what we sound like. Yes. Yeah. ServiceNow down 15, bro.
That's crazy.
It might just be as simple as it might just be as simple as it's not about the undervaluation. It's about, can you prove in the age of AI you can grow? Not 10%, not 15%, not 20, not 30, not 40, but like really grow in a world in which Anthropic's growing 3,000% in a year. And if you can't, I mean, why should they pay a multiple? It's a reasonable question for the street. Now, I think this is overdone. Don't get me wrong. But that's the question I think Bill is going to have to deal with on the call today.
We are listening to the beginning of the call, right?
Yeah, at 5 o'clock.
Cool.
Microsoft right here also down 1.34. All right, let's get to Tesla. Let's read from the deck. Try to get some understanding of these numbers. We continue to make meaningful progress on the build of the infrastructure and AI software that underpins our robotaxi and future robotics businesses in Q1. We commenced ramp of additional AI compute, new factories across battery and battery materials, and further prepared lines for the start of production for Megapack 3, Cybercab, and the Tesla Semi. We saw continued growth in demand for our vehicles in markets in APAC and South America, while seeing a rebound in the Middle East and North America. We are making the necessary investments that will ensure our access to key materials and components in each region across vehicle, energy, and AI as trades and geopolitics become more uncertain. In recent months, we have announced further regionalization and vertical integration of critical supply chains. Our focus on affordability and utility across our vehicle lineup continues to be a key competitive advantage, particularly as gas-powered alternatives become more expensive due to their reliance on a more sensitive and less flexible energy supply chain. So Elon kind of saying oil prices going up is good for Tesla. We are excited about Tesla's positioning in 2026 with tailwinds persisting for the autos business, our continued progress on FSD, the ramp of robotaxi, progress on Optimus ahead of mass production, and the growth of our energy production capacity. There remains significant effort and hard work to realize our mission of amazing abundance. As always, we are focused on maintaining a rapid pace of innovation in new and exciting technologies such as electrification, cutting-edge software, and artificial intelligence, expanding our lead in advanced manufacturing and increasingly supply chains resiliency to ensure to manage future risk at scale. The future is incredibly bright. That's your update. There's usually a slide where they talk a bit more about their ideas. So we continue to evolve and augment our product lineup, focus on cost. Cybercab, Tesla Semi, Megapack 3 are scheduled for volume production starting 2026, which I guess would be H2, which is now. So they're not extending that, which is good. First generation production lines for Optimus are being installed in anticipation of volume production. Maybe we get volume production in 2027. Capacity build out and ramp related to our multi-year infrastructure initiatives, including AI, compute, solar, battery material, and semiconductor manufacturing, are underway. Jose, I'll give it to you. Anything you're getting from these earnings that you think are exciting here?
I just saw a quick slide deck real quick. I mean, we heard about it, but their AI 5 tape out of the chip. So they're progressing really good with their chip development, which is good for both their robotics side and obviously the automotive side. And I think they're working really good in AI 6 as well. I think the development process is going there. So I really like this Elon, who has completely I do feel he's really changed in the past year of like where the focus is. And it's like purely in the AI ecosystem and everything that drives throughout there. So that's the only thing I'm seeing right now.
Operating cash flow of 3.9, free cash flow of 1.1. They received approval for FSD in the Netherlands. Unsupervised robotaxis in Dallas and Houston began ramping lithium production. Sam, anything you're seeing from these earnings that are standing out to you?
I haven't looked into the Tesla earnings yet. But I mean, they surprised people with free cash flow. That's definitely a plus. I think that the fact that they came to their earnings, people are expecting negative free cash flow. You come in above, but not even just flat, but even greater than that is a pretty big deal. But you know, I'm going to be a little bit realistic with Tesla. We'll see what happens in the earnings call. This thing has volatile moves. Hopefully it stays up there because the market is actually up after hours.
Tanner, do you have any idea why energy is down 15% year over year?
No, I don't. I'm mainly reading through and looking at them wanting to build the largest chip fab ever. I know that this is the commentary that Elon's been talking about, and he's been looking at. There's been so many industries that he stepped into and looked at it from first principles and been able to do what so many others couldn't. But this is a very, very complex industry, and I'm just so interested to see how TerraFab is going to come together, whether in partnership with Intel or other businesses. This, I think, is going to be a major make or break for the entire Elon, like SpaceX, Tesla, in the future of the companies.
The only good thing about that, right, Tanner, is I think for the first time you have an actual product that kind of coincides really well with all of those three businesses, right? It's like the chip itself. And I agree. I mean, I think TerraFab is super hard to build. But one thing that he did mention, I think, when he was talking about it, when he announced it, is TSM is hard because you need to build a supply chain line for a lot of different chips, a lot of different advanced packaging, a lot of different things. If he's just focusing on building one thing for just himself, and it's going to stay relative to that same design, the way he explained that, it reduces a lot of the complexity. I'm pretty sure there's still so much complexity, but at least you're removing some of those variables that companies like TSM and Intel have, where they need to work for other customers. Here it's just purely for our own stuff.
But didn't he also make a comment saying that, like, for EUV, he wants to essentially like 100x the output of what ASML is doing? And that seems hard. So
yeah, there's a lot of things that can go wrong with what he's going. And yeah, I mean, 100x in how much machines he need from ASML, or what he, I didn't.
Yeah, I think that this was part of it, right? Is that he wants to be able to bump out like something like 1,000 EUV machines as well, in a similar time frame that ASML can do about 10, and no other company has been able to do it. And
so I didn't even hear that. So is he trying to even build EUV machines himself?
That was my understanding. Yeah.
Oh, I didn't know about that. Okay, that I
Dylan
have
Patel
to
had
a. Yeah.
Dylan Patel had a podcast about it, how he's not sure if it's going to be possible, but obviously Elon's done the impossible many times.
Let me just read through this. Our partnership with SpaceX aims to build the largest chip fab ever, vertically integrated logic, memory, and advanced packaging to allow for rapid iteration as we anticipate greater chip demand than what existing and planned industry capacity can accommodate. This begins with the Tesla-owned research fab on our Gigafactory, Texas. In April, we completed the final chip design on our next generation AI5 inference processor. Isn't this super bullish, just AI in general?
Yeah.
If he's saying right now there's not enough supply capacity for all the demand just for one company.
Everything Elon does is super bullish AI, you know? Even the most recent acquisition, $50 billion of Cursor, he'd rather own that equity than them. Like, I don't even necessarily agree that it's just to juice up the valuations. I usually find that pure plays get better valuations than companies that have a mixed industry. So I think just being a space company or just being an AI company usually yields you a better result. But maybe he just sees an opportunity in Cursor or in the AI space and would just rather catch it before an even larger boom than maybe what we're already in. And maybe people think that the valuations are already extended. But if you're Elon and you believe the entire economy is about to 10x in 10 years, then getting your hands on equity today is, you know.
Yeah, and if my reasoning for him getting this Cursor company is more just the software side of it. I think right now what we're seeing is this AI agent evolution. And at the end of the day, for your AI agent to be able to use a software solution, it's all code. I mean, human interactions, like when we use an application, when we use anything, we use a mouse and a keyboard. But that mouse and keyboard kind of give the command to do so on and so forth. So he needs to have kind of that solution to be able to do that with an AI agent. AI agent is just going to be able to run kind of your application. It's all software based. So it makes sense. I don't know if the valuation makes sense. That's a lot of money that he's paying, but I think it's to overall help that XAI company. We see Cloud Code and Codex do extremely well right now.
So if Cursor's on, go ahead.
If Cursor's worth 60 billion, I think Wix should be more than, 3.8 billion or 4 billion, whatever it's at. But who knows?
But realistically, I don't get why would you pay 30 times sales for Cursor?
Yeah, you already have a quote unquote frontier model. I don't get why you're buying a wrapper. I don't understand.
But they're still pulling in $2 billion of revenue, so it's not like they're not contributing. But
I also think that's a low estimate. I think a lot of people have pointed to much higher than that recently because they've had quite an explosion in commercial or in enterprise demand. I think it might be like something closer to double that.
Let's get some coverage here on IBM, and then we'll keep looking at ServiceNow.
This non-GAAP EPS $1.91, 10 cents better than expectations. Software beat with Red Hat growth rebounding to 10%. Now, despite that beat, CEO Arvind Krishna telling me exclusively before the analyst call that IBM is maintaining, not raising full year guidance after just one quarter because of the many potential ripple effects of global events like the war happening right now in Iran. Krishna telling me, is there going to be an issue around oil as inflation goes up? Will that drive people to spend a bit less? I'm not predicting any of this will play out, but in the face of those possible headwinds, we think maintaining our guide is prudent. I asked about stability across the world. He said Western Europe is maybe a yellow flag. He said they've gone through these shocks a few times. They actually come out okay. I think this time around is an open question. I don't think anyone will know the answer for another month or two. Finally, I asked him about Mythos, that Anthropic model on cybersecurity. He said it is a big deal, but it's probably not the only one out there. He said, we think it's the only thing. 3 months later, somebody copies it and it actually does it better. The intent is to find and exploit vulnerabilities. I'd be surprised if somebody else hasn't already done it, but hasn't bothered to claim it, saying that people have to layer on protections instead of expecting that they're going to be able to plug every hole, guys. But IBM stock, the expectations had ramped into this print, and you can see, I think it was a little bit lower despite the beat last I looked, guys.
Yeah, John, down 4.8% right now. It's an emerging theme. Companies being a little conservative about projecting ahead, even if they've beaten in the first quarter. Thank you very much. Lam Research earnings also out. Christina Partsinevelos has those numbers. Christina.
And the stock is up almost 5% on an EPS and revenue beat. The company actually hasn't missed their earnings per share in the past 4 years. So we saw an EPS beat of about 9 cents on revenues of $5.84 billion. They saw strength in system revenue, in customer support revenue. I should preface that this is a company that designs chip equipment process equipment, I should say. For their Q4 guide, they did provide a higher range, 1.65. That's the midpoint. The street wanted 1.45 in terms of EPS. And then revenue for Q4 also came in higher. So across the board, you're seeing a strong beat for guide. So that was a big driver. And also, I should say, gross margins ticked higher too. And they're predicting that gross margins will increase to about 50.5% in the fourth quarter, higher than the 49% the street wanted. So this is a strength for Lam Research, guys.
For sure. Christina, thanks. Let's get back to Phil LeBeau for a bit.
ServiceNow, still the story of the day after hours. A bunch of people in the chat saying they're buying the dip here. Any of you guys feel compelled?
Nope. I always wait.
Okay.
Wait until tomorrow. I mean, if you really want to open a ServiceNow, but
You don't always wait. You've made some earnings calls for sure.
If it's a trade, maybe, but like.
No, but Sam, if you bought at 86 and it's at 88, what's the reason to wait? You think there's something?
Well, for me, I already have a position, so I don't want to add to it. But if you're waiting to buy the stock and you saw it at $104 today and you were just like, oh crap, I missed the boat, I don't see why an earnings like this would change your mind unless it's just the reaction. But for me personally, if I'm going to add to this position, which I don't even know if I'm going to, it's already a big position, I'd have to wait to digest the earnings, see if there's anything wrong. I doubt there's anything wrong. Usually it's just algos reacting to headline numbers. But we'll see what happens with the earnings call. I just, you see earnings like this, they don't beat guidance. The software just sell off. I'm just kind of surprised that this happened after it had already sold off.
Yeah, I mean, I think that's why we're all shocked. That's quite aggressive on the downside here. Is oil spiking after hours? Oil's not, let me check. I don't think oil is spiking like crazy. We also still need an update on if we are officially negotiating with Iran or not. Trump said maybe by Friday. Crude's at 92.8. Not a crazy spike. Oracle, little recovery. Microsoft, little recovery, but nonetheless, they all are down.
I would even say Sam was pretty correct on Tesla. They sort of just stay in the exact same range, this company. Up 4%, I think, was very similar to what we saw last quarter, or maybe it was the quarter before. It'll rise or fall, but it really does stay in that 5% range almost every quarter. And then obviously has a lot of volatility throughout the quarter. But on earnings, this seems to be like an option seller dream.
Yeah, if you bought calls for tomorrow or even like a month away before Tesla earnings, like you're not really going to do that good. Like 4% move is not a lot. Still got to wait for the earnings call too. We'll see. But again, I hope it stays up here because if ServiceNow can't bring down the market, then that's good news.
Oh, wow. Guys, you know who just invested $2 billion into SpaceX?
Who?
You guys don't want to guess?
I already knows I'm not going to guess.
Yeah, Jose, you don't look at the chat. Tanner, don't look at the chat.
They would.
Yeah,
No,
I mean, I was thinking something similar.
Why are people saying me? Like, does anyone in the chat have $2 billion? Everyone's like, me.
Easy.
Nancy Pelosi.
Tom Lee. Sydney Sweeney. Oh my gosh.
Is it Jensen? Because that would be funny.
That would be funny. That would be great. No, it is Tesla. They
okay. Well, that's
$2 billion. I mean, I don't know if that makes sense, but I guess it does.
So is this before or after the recent valuation jump?
That's a great question. Because wouldn't SpaceX invest in Tesla? They're a larger company than before. Tesla definitely has invested in previous rounds. I think at like 850 billion, Tesla put in 5 billion, if I'm not wrong. I could be getting that wrong, but
yeah, I think regardless of the valuation, if they're going to come together at some point, then SpaceX has to buy that equity back from itself.
They're going to
merge. As circular as that.
Yeah, new higher valuation.
Does not get as circular as that.
Last quarter, Tesla also invested in, was it last quarter or 2 quarters ago that they invested in XAI, which then joined SpaceX?
A couple quarters ago, yeah.
Yeah.
Yeah, I think it was last quarter. I think this merger is inevitable. It should be inevitable. Okay, so in about 18 minutes, we will see what's happening with ServiceNow. Again, for those that are wondering why it's down so much, a lack of a significant beat seems to be the reason. Slight guidance miss, but that can't be the reason. Even the lack of an earnings beat, I don't know if that should be enough of a reason.
I mean, I think the guidance is, that's got to be the reason, right? Because people are just modeling out looking forward. And
but a $300 million miss is when the stock's already down 50%.
Yeah, I guess it depends on what does that mean for year-over-year growth. I didn't see that. What does the new guidance
22%
represent for year?
It's what they've done for the past couple of years. 22%. Yeah. I guess the lack of the 30-40% growth that an AppLovin or a Palantir or Reddit are doing.
Known that. Like,
yeah.
We're starting to get down to like Salesforce levels of value. Well, obviously, we're still a little bit off, but for higher growth.
Yeah. I agree. And they are a profitable company. That's not that common for a software company growing at 20% plus to be a profitable company. Even CrowdStrike is like on the brink of profitability, but ServiceNow is already in profitability, no problem. Someone mentioned the Artemis acquisition, creating more debt. Well, believe that did complete, but that's already public news, so I don't think that's anything necessarily new. I actually haven't looked to see in their slides if they are acquiring another company.
Oh, hold on. No, there's a quote there. Due to the conflict in the Middle East, Outlook reflects assessment of geopolitical headwinds on deal timing for the remainder of fiscal year 2026. We will see some near-term headwinds to margins as we integrate the Artemis business in fiscal year 2026.
That's normal.
Maybe that's the reason.
Is that not normal for M&A?
I mean, also, it's not like global in the Middle East region is a large, like they don't have concentration risk when it comes to ServiceNow. Like if this was like Confluent, maybe because one of Confluent's clients is in the Middle East. So I could see what that would impact it. But ServiceNow doesn't have client concentration risk. They have a lot of the enterprise and Fortune 500 companies. So, but yeah, the margin issue also slightly missing on guidance. The way the market looks at probably is like, you didn't beat it, you're going down.
Yeah, I don't know if they could blame the Middle East on this one, dude.
East in the Middle East.
I mean, if you're an oil company, you can blame some. If you're an airline company, a cruise line, you can blame that. ServiceNow, I don't know. 90 after hours, trying to get a little bit of a bounce off 87.
Did we ever get QuantumScape? This is not a company I follow at all, but it's up 9%. I don't know if we ever got numbers for that.
I have them right there. EPS revenue is 0.
That's good.
EPS, they came in at negative 17 cents. That's what the street expected.
I'm expecting a Wall Street upgrade.
Dude,
zero revenue, the potential.
We all do more revenue than this random battery. We should go public, dude. I mean,
but I think there was a Silicon Valley joke about this like a long time ago. Like if you have no revenue, then that's perfectly fine. Then people's dreams can shoot as high as they want. But the second you start putting in revenue, then people start to model it. So if you don't put up any revenue, then you can get the greatest valuations.
Hasid just said, I can imagine rate cuts alongside reducing the balance sheet. Okay, so he's talking about
Tanner, don't.
Go ahead.
Someone said, Tanner, don't act like Nebius is profitable. I said revenue, bro. We're talking about zero revenue.
They just want to stick it to you, man. They just want to stick it to you.
Yeah, but to even have a profit, we need to have some money coming in, you know?
Bro, BM&R has revenue. Oh gosh.
No, but in all seriousness, QuantumScape, I think they're actually becoming a relatively important company for batteries. It's just they're in the early stages, right? So they're not going to put up any meaningful growth.
So yeah, I think they have contracts with companies like Volkswagen, and I forget some other names. I don't follow it too much, but I know they have like at least some big OEM in the automotive players work with them.
Yeah.
Work with them, but don't pay them anything.
Unpaid interns here.
Yeah.
Well, Tesla above 400. At least that's nice. 402. Dude, these software companies better not deliver these ServiceNow types of earnings. Otherwise, they're all going down except the ones that smash expectations, which I would imagine are AppLovin, Palantir, and Oracle. I mean, those are the three. And hopefully Microsoft, if all four of those, because Microsoft missed last time, but it was a very slight miss. But they've all got a crush.
It's so crazy though, putting kind of, I understand why Oracle and Microsoft are put in the software space, but I put them more in like the AI infrastructure space. It's crazy how they're kind of like in that middle. It's like if one side does bad, you punish it for one, even though the other side is doing strong.
Are you just talking about today? Because today?
I mean, in general, Sam, it's like, right. Microsoft and I think Microsoft and Oracle both get punished anytime we see anything happen to the SaaS market, even though these are also ones that are going to benefit if we need more compute because of their AI infrastructure. So it's like, how do you play that one?
Yeah, maybe Oracle, like before the whole AI wave, was kind of a big deal when it comes to software, PeopleSoft and all their stuff, and IBM too. But there's such a significant amount of momentum with AI infrastructure, especially with Oracle, right? Like all that RPO, like almost $500 billion RPO. Like, who cares about some of the software business like losing? Like I'm sure they don't care much about it, right? Like, is that really can impact them? You know, it's the OCI. That growth is what's super important when it comes to Oracle. And Microsoft, I'm sorry, IBM too, but I could understand. I mean, obviously they reported earnings, so they're going to be down a little bit. I do wonder if IBM was not down this much, would, never mind. ServiceNow is down 13%. There's no excuse for that. There's no sympathy play when it comes to that. Like, they're down 13%.
Trump to Fox News. There is no timeline for the war in Iran. We want to reach a good deal with Iran for the benefit of the American people. Okay. I think the street is really done reacting heavily to the war headlines unless we actually go back to bombing back and forth. So now it's up to earnings, and if you don't deliver, you go down, I guess.
And question for you guys. I feel like the last 2 quarters, AI infrastructure companies, especially even like the big ones, would get punished if they mentioned kind of OpenAI as the big player in their RPO. And just this quarter, we're seeing that OpenAI was actually correct to get a lot of this contract, because now we see Anthropic, who was a company that used to make fun. I think Dario very openly said that OpenAI was being very irresponsible for making all this contract on capacity. Yeah. But just this quarter, we see Anthropic in the past 4 weeks make a deal with Google, make a deal with CoreWeave, make a deal with who else did they make a deal with? Amazon. I think those 3 players in just the past 4 weeks made multiple year. Do we feel a little bit different of this RPO from OpenAI, or do we now just think Anthropic is also a fool like OpenAI, and anytime anybody's going to say either Anthropic or OpenAI, we kind of get a negative sentiment towards it?
No, I honestly think any company that is... So I completely agree with you, by the way. Just to preface, before, if you said OpenAI, your stock went down. If you say anything along the lines of Anthropic during your earnings calls or in your press releases, things go up. Like, this is a huge win right now for companies. That being said, I do actually think that OpenAI has an advantage because of the amount of compute and the amount of risk that they took on. And now I think Anthropic is trying to play catch up because their ARR has skyrocketed from 9 billion to 30 billion. Even though that's actually coming into question. I know OpenAI kind of went after them, said that maybe they're, putting up some fake numbers. But still, I do think that they need compute, and they're heavily compute constrained. You can immediately see that if you look at their reasoning models and their thinking models. They're sort of having like a shrinkflation on the amount of tokens that they're using.
I've heard this comment by a lot of people. Someone who works at an IT department says, I can guarantee when our contracts with these companies come up, aka ServiceNow and Salesforce, we have the upper hand. I've heard this like 5 times over the past month. Why wouldn't you have the upper hand? Right? Like if you're getting a counter offer from an Anthropic, yes, it would be really tough to get rid of all your legacy systems and take all the data out and incorporate something new, guardrail security, but you can definitely nudge them on the pricing a little bit if you threaten to leave. I mean, yeah, I would imagine that potentially hurts margins or go-to-market strategy for some of the legacy software companies.
Yeah, I think it's more of just because a lot of ServiceNow's revenue comes from seat-based licenses. So obviously you're not going to replace the entire suite of software when it comes to ITSM or service management with LLMs or AI, but it could have an impact. That's probably the reason why a lot of the software stocks, it is the reason why a lot of the software stocks lost their premium, but they lost their premium so much to a point where even if you took that into account, which we clearly have seen in the ServiceNow earnings, it wasn't really that big of a deal, but the market will do whatever it wants to with these. However, I mean, I still think these numbers are great. I mean, like we mentioned before, 22% growth. It's not like they went down to 19% growth or decelerated to the teens. They still kept in the 20% growth. They still did lock in more contracts. They're still doing it. I mean, actually, I didn't check their dollar-based net retention. It's usually a pretty important metric to see how much they're charging existing clients more every single year. So if I go to that, DBNRR, oh, they don't list it on here.
SoFi is proud to announce a new HLOC offering that will allow our members to access their home equity through a seamless end-to-end process directly within our platform.
You say HLOC?
Oh, HELOC. I forgot. I meant HELOC. Didn't see the E there.
Nice.
There's going to be like 300 comments now about that. But
That's
okay,
what happens
Tanner,
whenever you rent. You don't even know what home equity even is.
I know what a home equity line of credit is. Okay, I understand that. My dad literally just got one last year. I know what it is. I just didn't. Whatever, dude. This is bullish, right?
Yeah.
They're a bank. They should be doing that.
Cactus, though, is late like by 12 hours for you. So you got to downgrade his pay this month.
So I just tweeted it. What do you mean he's late?
I get it. They reported. Okay. Do you want me to? You don't believe me? They posted this morning at like 7 a.m., dude. I've got a shirt that says I'm the SoFi guy. I've talked to the CEO. He posted it 12 hours ago. Okay.
That's funny.
Well, why is their Twitter account posting it this late then?
I get it. They're slow. They're posting it again.
Okay. Well, anyway, there you go. SoFi.
But yeah,
yeah. Go ahead.
They are now offering fully digital HELOCs, which I think is going to expand the amount that people use this. They had HELOCs before. It just wasn't fully digital. You couldn't do it in app.
So the big news is now you can just do it digital. I'm just asking. I don't follow
didn't
this.
say the stock should go up.
I was just curious.
all of Jose's companies are like curing cancers and like.
Yeah,
everything that his companies do are just creating the next generation of AI agents and stuff. My companies are just like, hey, we brought it. We're now mobile.
Yeah, Jose's like, HUD, SoFi, PayPal. I'm invested in AMD, okay?
Yeah, he's like,
that's what matters. Okay, so the call's about to start in 5 minutes. We're going to do ServiceNow for 30 and then Tesla at 5:30. But what would you ask Bill McDermott if you were an analyst on the call? Put in the chat, but Sam, we'll start with you. What would you ask?
I would ask him the question, have you, like we mentioned before, are you seeing clients renegotiate their contracts based on decreasing the headcount or the actual or unexpected downtick of usage or reliance on your products? And that's kind of like a blanket question, but hearing his response, which he probably rehearsed over and over again, would probably be more important. Like, he's not going to give out any answers that isn't already out there, public information, but to hear his input, like what is going on there. And hopefully he says, give us our market cap back. That would be pretty funny if he said that again.
Okay, Jose, any question you would want to ask?
I don't follow this company, but in just the overall industry, I would just ask management to just be real and give us like, what's the actual expectation revenue coming from AI, right? So investors can stop guessing. Is this a company that's gonna 10x because of AI? Is this a company that's gonna 1x? Because like, what should investors realistically expect this year and next year because of this AI push? And I think whatever the answer is, it can finally create some calm for investors and what they should really be looking into.
Yeah, I would think a very similar thing in terms of just now that we're going to sort of a token-based, like usage-based economy for many of these software companies. Just like how does Bill see ServiceNow fitting into that, and how do we model this company over the next couple of years?
Yeah, I would ask the same stuff you guys are asking. I mean, ultimately, I think Bill has to come out and have an agenda on how to talk to the street here. This really is a simple question. I mean, even the Claude portfolio that someone gave $50,000 to, the reason it bought ServiceNow at around the same price, 85, 88, is because of the integration with Anthropic. And the logic was it's not going to be commoditized. It's going to work with it. And so for some reason, the algos on the street are not believing that. And Bill has to get them to believe it today.
But outside of like Palantir in the software space, have we really and Anthropic and OpenAI, have we really seen any company not in the AI niche kind of see these crazy returns?
In terms of growth rates?
Yeah. Like,
no.
I don't think we have.
Have we seen any company outside of the infrastructure and the model names make any money?
Palantir is making a lot of money off it. I actually think ServiceNow is making a lot of money off it too. So is Amazon with their cloud.
What are ServiceNow's adjusted operating margins?
Like 15, 20%. I don't know off the top of my head.
Okay, so that's the difference. Dude, Palantir's at 51. I think that's also the difference. Like Zeta is accelerating. Zeta is just a smaller company. But I think the street is like, you're not growing crazy on the top line. Again, Palantir's at 70% top line. ServiceNow's at 20. And then on the bottom line, 15, 20% is like when Palantir's putting up 50, it's like you're paying a lot of salespeople and
you're not even 13%. So yeah, I mean, they don't have like a rule of like 150 like Palantir, whatever the number is. And that's the reason why Palantir is at a premium, because of that reason. Texas Instruments is up 10% plus after hours. That's insane.
Do you have the call, Amit?
Yeah, I have it. Okay. It's not live yet though.
On Semiconductor's up 5%. Let's freaking go.
Well, hey, Sam, congrats on. This one's going for you.
Did you see that irrational analysis post yesterday talking about On Semiconductor going long? I'm like, yeah, let's go. Let's go. Pump my bags. Now do the same for ServiceNow. I want to see a Citrini article on ServiceNow tomorrow. He's going to freaking Citrini. Everything's going so good today, and one thing goes bad, it like kind of shats on your day. I'm not going to lie.
Okay, call's not live yet. Should be in a minute, and then we'll see to it.
Bill McDermott's going to need to lock in, return shareholders some capital.
I feel like these companies need to have a video earnings call. Salesforce finally did it.
Yeah, that's why they're down 12%.
No, they
going
need
back
to
to the traditional audio
look
call.
At you in the face, in the camera, and say, "Stop selling our stock. We're gonna be okay." All right, here we go. ServiceNow.
Go ahead.
ServiceNow earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during that time, simply press star, then the number 1 on your telephone keypad. I would now like to turn the call over to Darren Yip, Vice President of Investor Relations and Market Insights. Darren, please go ahead.
Good afternoon, and thank you for joining ServiceNow's first quarter 2026 earnings conference call. Joining me are Bill McDermott, our Chairman and Chief Executive Officer, Gina Mastantuono, our President and Chief Financial Officer, and Amit Zaveri, President, Chief Product Officer, and Chief Operating Officer. During today's call, we will review our first quarter 2026 results and discuss our guidance for the second quarter and full year 2026. Before we get started, we want to emphasize that the information discussed on this call, including our guidance, is based on information as of today and contains forward-looking statements that involve risks, uncertainties, and assumptions. We undertake no duty or obligation to update such statements as a result of new information or future events. Please refer to today's earnings press release and our SEC filings, including our most recent 10-Q and 10-K, for factors that may cause actual results to differ materially from our forward-looking statements. We'd also like to point out that we present non-GAAP measures in addition to, and not as a substitute for, financial measures calculated in accordance with GAAP. Unless otherwise noted, all financial measures and related growth rates we discuss today are non-GAAP except for revenues, remaining performance obligations, or RPO, current RPO, and cash and investments. To see the reconciliation between these non-GAAP and GAAP measures, please refer to our press release and investor presentation, which are both posted on our website at investors.servicenow.com. A replay of today's call will also be posted on our website. With that, I'll turn the call over to Bill.
Thank you very much, Darren, and welcome everybody to today's call. There's a lot of noise out there, so let's get straight to the point. Here's the ServiceNow update. With the AI Control Tower for Business Reinvention in the center of a growing $600 billion plus total addressable market. We have a $28 billion RPO business that's growing at 23.5% year over year. The most open enterprise platform that protects customer choice, with active users on our platform continuing to grow, thousands of partnerships around the platform expanding daily, AI, native packaging and pricing on our fully autonomous platform, a la no sidecar AI at ServiceNow, a world-class team with a proven track record of building truly global businesses at scale. Our first quarter results are consistent with a company of this stature, once again exceeding our guidance metrics across the board. Subscription revenue grew 19% in constant currency, above the high end of our guidance. CRPO constant currency was a robust 21% growth, 1 point above our guidance. Operating margin was 32%, a half a point above our guidance, and free cash flow margin was 44%. We had 16 deals greater than $5 million in NNACV and 5 deals greater than $10 million in NNACV. Now Assist NNACV to date continues to outperform even our expectations. The number of customers spending $1 million plus grew over 130% year over year. Deals over $1 million grew more than 30% year on year in Q1. Moveworks closed 7-figure deals in Q1. They closed more deals than they did the entire year last year. Now has merged with our employee experience business and rebranded as Employee Works. So Bhavin Shah, the former CEO of Moveworks, now runs the whole show there. And that business grew 5x year over year. So we have a great story in Moveworks coming into ServiceNow. Our sales CRM NNACV grew more than 5x year over year. That's quintupled, with deal count growing over 80% year over year. With a surface area so broad, our goals for ServiceNow are clear. Here they are: fast time to value for our customers, revenue growth acceleration, margin expansion, reduced stock-based compensation, and outperforming our own rule of 55 plus standard. To say we're excited for Knowledge and Financial Analyst Day on May 4th in Las Vegas would be an understatement. We have a lot to share with you. And the board of directors are very proud of ServiceNow and the way it's performing. And the company is on track for our best year ever. Since our last print, speculation about enterprise AI has persisted, and that's okay. That's what earnings calls are for, to clear things up. My answer is always the same. There has never been a tailwind for ServiceNow like AI. Since Fred Luddy started the company, we've always focused our platform on the jobs our customers needed done. Let me bring this to life for you in 5 hyper-growth areas. The first, our core IT business. There has never been a more compelling moment to be the CIO's system of record. We're often described as the ERP for IT. When an enterprise fully deploys ServiceNow, it's not just software, it's an end-to-end operating system. And today, an average Fortune 500 company has 100 million lines of custom code to manage their business. And this excludes the code in other systems of record where there are billions and billions of lines of code. As code volume increases 20x by 2030, the complexity of managing this explosion of code will increase exponentially. The volume of tickets generated by this complexity will also explode. In this scenario, the number of tickets hitting an ITSM system will increase by 50x compared to today. The biggest IT buyer in the enterprise was, is, and will continue to be the CIO. This remit will substantially expand by the complexity of the agentic business. ServiceNow's relevance grows in direct correlation with the expansion of innovation across the AI ecosystem. Think of us as the workhorse for workflow. The second is AI security. We're thrilled that the Armis acquisition closed earlier than expected, which, as you'll hear from Gina, gives us some nice acceleration in full-year subscription revenue growth. Yevgeny Dibrov, the excellent CEO of Armis, will run our security business, building on ServiceNow's outstanding foundation. And here's the problem. Companies are deploying agents with zero visibility. Therefore, they're unable to see the unmanaged IoT, OT, and medical devices, lacking unified access control, with no coordinated way to remediate vulnerabilities before they become breaches. Today, ServiceNow addresses this challenge holistically. As the asset intelligence foundation for the AI control tower, Armis solves visibility, real-time agentless discovery of every asset, IT, OT, IoT, medical devices, shadow IT, a continuously updated map that traditional tools can never achieve. 9 out of 10 Fortune 10 companies already rely on Armis. We're excited to deploy it throughout the top 2,000 and beyond. Veza solves the identity governance. Patented access graph technology maps access across people, machines, and AI agents in real time. Dynamic, context-aware permissions that are governed continuously, not set once and forgotten. This is the Active Directory for AI agent identities. This business will continue to be run by the excellent CEO of Veza, Tarun Thakar. ServiceNow is the biggest piece of the puzzle. Our existing billion-dollar-plus security business ties everything together as the action layer for the CISO. Armis asset visibility, plus Veza's identity governance, plus ServiceNow's business context, CMDB, equals a unified end-to-end security stack that can see, decide, and act across the entire technology footprint. Nothing else in the market does this. Nothing. With Mythos as one example, security activity is skyrocketing. The actions run through this platform, alerts, tickets, actions, resolutions, they're all revenue drivers for ServiceNow. Enterprises can't afford experiments in today's risk environment. They need ServiceNow as their strategic defense shield for the enterprise. The third is AI native CRM. We say AI control tower for business reinvention because there's no more immediate need for reinvention than legacy CRM. You know, it's a little ironic that a category promising a 360-degree view of the customer has left most enterprises spinning around in circles. Best-run businesses need a dramatically different and better way. Customers tell the story better than we can. A multi-market European telco faced 85-plus fragmented applications, no standard quoting process, and a CPQ setup where introducing a single new product took 3 months. ServiceNow Sales CRM with CPQ collapsed this to 1 week. A global power technology leader across 190 countries has gone live with phase 3 of its ServiceNow deployment, replacing legacy CPQ. Using AI-driven blueprint automation, the company is reducing new product introduction time from 6 months to 6 weeks. A regional Latin American bank is live with ServiceNow, building a full front office experience for relationship managers. Agentic AI is scanning portfolios and auto-generating leads using propensity logic tied to their data lake. Because legacy CRM represents such a significant expense line for enterprises, the demand for an AI alternative is immediate. ServiceNow is not only bringing a technology superior solution, we help customers swap out legacy SaaS vendors and go live fast with AI. The fourth area is AI native front door and the employee experience. As people use more of their AI tools like ChatGPT, enterprise leaders urgently want their employees to enjoy a clean conversational experience. ServiceNow introduced Employee Works, combining MoveWorks, conversational AI, and enterprise search with ServiceNow's unified portal and autonomous agentic AI workflows. This is available in Teams, Slack, or any browser to turn natural language requests into governed multi-system execution for nearly 200 million employees so far. We launched midway through Q1, and it's already closed many deals above $1 million. You'll also see some exciting new experiences, and we will announce this in a big way at Financial Analyst Day in Vegas. As more employees converge on our conversational experience, ServiceNow will deliver intelligence from any source, putting AI to work for people. The fifth area is workflow data fabric. We all know that AI is only as valuable as the data itself. Enterprises are frantically organizing and cleansing data from countless disparate sources. Workflow data fabric connects data across systems. It adds business context via a unified data catalog and applies policy-based governance controls. With ServiceNow, AI understands how an enterprise actually works so they can take trusted action. I explained the 5 areas for one good reason. All of them have the capacity to eclipse the size and growth trajectory of ServiceNow as it stands today itself. And for years, we've strengthened a common platform architecture for these businesses, and for others, we're incubating to harness enterprise AI. ServiceNow has thousands of system connections, a live knowledge graph, and real enterprise context. We accommodate any model aligned to customers' policies, permissions, and rules, and every decision in ServiceNow is auditable end to end. Our platform delivers workflow execution across IT, HR, CRM, and security. It's not recommendations, it's outcomes that matter. Our AI Control Tower provides real-time visibility across every agent and every workflow, because governance has to be foundational, not retrofitted. This architecture is a big reason why we recently announced the entire ServiceNow portfolio is AI native. AI, data, security, and governance are now built into every product and package, not a separate purchase. This is a deliberate break from sidecar AI. We're not bolting intelligence onto disconnected systems. We're combining context with execution on a single platform. ServiceNow's context engine is the differentiated capability here. It learns from every decision ever made in a company, grounding each AI agent action in live context, approval chains, asset dependencies, identity relationships, and business rules. We've now trained over 95 billion annual workflows and more than 7 trillion transactions, and our 22 years at the center of the world's most sophisticated enterprises is really showing up because it brings unmatched intelligence to every decision. And this compounds with every workflow we run, making the platform smarter over time. In fact, in every millisecond. For example, it knows which asset is tied to a compliance process, which approval chain applies to a given cost threshold, and which vendor's history should inform how a request should be handled. So when people ask, what's the difference between ServiceNow AI and the foundation models, you can boil it down to one word: context. I read that one of our customers referred to ServiceNow this way: the control tower is the quarterback. It figures out which agent or LLM to use. Merge that with a quote from the Hall of Fame coach, Bill Walsh: chaos is the quarterback's natural environment. Ladies and gentlemen, there's plenty of chaos in today's enterprises. You have hyperscalers, systems of record, foundation models, data lakes, homegrown tools, and agents coming at you from everywhere. That's why our platform is totally open. We integrate with all of them because ServiceNow is the only enterprise AI platform that converts that chaos to control. We would not trade positions with anyone. Let me give you a quick overview of a couple of announcements we just recently rolled out. ServiceNow launched Autonomous Workforce, teams of AI specialists with the defined roles that execute enterprise work end-to-end with built-in governance, auditability, and human escalation. Our own deployment in ServiceNow is resolving 90% of employee IT requests, with the specialist resolving assigned cases 99% faster than human agents. That's an AI specialist. In the AI native platform announcement, you might have missed Build Agent, which gives us developer openness, another meaningful unlock. Developers can build from any integrated developer environment: Claude Code, Cursor, Codex, Windsurf, and deploy them directly to ServiceNow. This expands the addressable builder community significantly. Build Agent Skills isn't just a developer tool. It's the on-ramp to an ecosystem where every custom agent is automatically governed, data connected, and workflow integrated from the moment it deploys. With Enterprise Service Management Foundation, we are expanding our opportunity in the mid-market as well. With deployment in weeks, not months, this is the direct expansion of our addressable customer base. One early example is Robinhood. Robinhood is deflecting 70% of employee requests before human intervention. They've already eliminated 2,200 hours of manual effort monthly, and the success just continues. I know many are interested in the progress of our hybrid business model, especially with regard to consumption pricing. You'll be happy to know that 50% of net new business now comes from a non-seat-based pricing model, including tokens and other assets such as infrastructure, hardware, and connectors. Our hybrid pricing model gives customers the best of both worlds: predictable foundational seat licenses combined with usage-based scalability. It's the freedom to scale AI adoption without a friction that the customers love. We continue to see the hockey stick taking shape. One example is British engineering and technology company, 45,000 employees, 50 countries. They're using ServiceNow autonomous workflows, employee self-service, and it's jumped the usability and the outcome by 3x With 38,000 tickets now deflected, resolution time is down by 2 entire days. A leading online travel company is using ServiceNow Agentic AI to deliver 11 million autonomous AI resolutions annually for HR and IT alone. They've freed employees to focus on strategic work. Processes that once took days now take minutes. The results are transformational. Over 230% ROI, 45,000 hours back to their people, and millions saved annually. These and many stories like them validate our hybrid thesis. As the business value emerges, refresh upgrades follows. We'll have more on this at FAD. We really can't wait. We're seeing continued meaningful acceleration in the partner ecosystem. There is deep technical collaboration between ServiceNow engineers and OpenAI technical advisors. OpenAI native voice and text models are integrated directly into the ServiceNow AI platform, and they're using us as a gateway into the enterprise. If you think about it, ServiceNow AI specialists are working side by side with Google Gemini AI agents. They're doing this across 5G networks, retail and IT operations with zero data movement and zero gaps in governance. Claude models are also deeply integrated into ServiceNow AI platform for developers and employees. ServiceNow, NTT, Docomo, and StarHub are developing the industry's first intercarrier autonomous roaming resolution model on the ServiceNow AI platform. ServiceNow and Cohesity announced a partnership to deliver agent resilience by combining ServiceNow's AI agent control tower with Cohesity's immutable point-in-time data recovery. ServiceNow and Carahsoft expanded our partnership to extend ServiceNow AI platform availability. This opens all Carahsoft's commercial channels in addition to its established government network of 10,000 plus resellers. There's so much to talk about. I want to leave some for Q&A, but a colleague today reminded me of something Warren Buffett often quotes from Benjamin Graham. In the short run, markets are voting machines, and right now uncertainty is winning the vote. But don't worry, in the long run, they are weighing machines. And I'll tell you, I'll get on that scale with that ServiceNow brand on my chest any day. We look at it, we studied it, we dare anyone to bring a better solution to the market than ServiceNow. We are the rules and the rails of business. When you're faced with these results, trust what you see. You have every reason to believe your own eyes. Don't fall for the parlor trick that one touch button can replace 22 years of excellence. This is not a company that shrinks from challenges. It rises to every opportunity. To all our shareholders, thank you for your continued belief in ServiceNow. We will never let you down. I'll leave you with this. There's a perfect correlation between enterprise AI from any source and ServiceNow's expansion. We're letting it rip. Whether it's built or bought, ServiceNow will unlock more value out of every dollar spent on AI in the enterprise. That's a guarantee. There are a lot of things AI can do for your business, and we love them all. There's also a lot of things AI can do to your business, and we want to protect you. We have comported this in how we've composed this company organically and with the integration of MoveWorks, Veza, and Armis. Our platform has gone from land and expand to control and compound. AI that thinks, workflows that act, all production grade, enterprise scaled. ServiceNow is the AI-defining enterprise software company of the 21st century. We're just getting started. I'll hand things over to our President and Chief Financial Officer, Gina Mastantuono. Gina, over to you.
Thank you, Bill. Q1 was another quarter of outstanding execution. The team delivered strong results.
Okay, the next 15 minutes are literally going to be the CFO reading from a PowerPoint. We got Tesla starting in 4 minutes. We are not going to get the Q&A, unfortunately, because we've got Tesla. But I think this one deserves a reaction. Tanner, your thoughts on this call?
I mean, he's pissed. He's just emphasizing random words in a sentence. Some of those were so funny. Yeah, you can hear the frustration. I think that he believes what he's saying, that his business will stand the test of time, and it might. But I think that he's also downplaying what a single button can do. This button's been proven pretty powerful. So, yeah, that was definitely an experience.
I loved it. I don't think I've ever had a call where a CEO is that pissed off and yelling basically in different tones. Like random words would just like elevate his volume, and he would be like, "Oh wait, why? Like where did that come from?" However, I don't think it was that effective. I just think he was yelling about how great we are. He was not telling a story. He was not trying to understand the concerns of the market. He was not being sympathetic to the whole weighing machine, voting machine. Well, the voting machine is really hurting a lot of people right now. You've got to be able to sympathize with what's going on right here. And quite frankly, I didn't get the story. I still don't know what he said or why ServiceNow is relevant. Like, it was just a lot of stuff thrown at me. And this, I think, underwrites the reason why Karp is a good communicator. Like, you need someone to sell a story philosophically. There needs to be 1 or 2 takeaways, not 17 different stats about why I think ServiceNow is important in the enterprise. And I didn't get that. I didn't get that here. So I don't think that was really effective. The stock probably shouldn't be down this much, but I don't know if yelling for 25 minutes made a lot of sense to get people to care. Sam, your thoughts on the call?
So he always talks like that this is just how this is classic Bill McDermott. He obviously is pissed off.
He has been a crazy person.
He always talks like, if you ever watch any of his interviews, he's always like very straight with what he say. He was the greatest salesman at Xerox. And we all know how Xerox was this massive company in the 80s and the 90s and the early 2000s. Like this is really what brought him here. And he's the successor of Frank Slootman, who brought this company public. And then Frank Slootman went on to Snowflake to bring that company public and so on. Frank Slootman still sits in that board. Like, I think Bill McDermott is a great CEO. And I think that this issue that's happening now with the stock down 30% is not a ServiceNow problem. This is a software problem. It's a very clear software problem. Otherwise, software stocks wouldn't be down. If this was a ServiceNow problem, ServiceNow would be the only stock that's down in the whole sector, but they're all down dramatically. So this is not a ServiceNow problem.
But okay, so I get the point that he has talked like that before. There was obviously a bit more anger in his voice, at least I think most people could tell. Do you think it was effective, him telling the market how amazing they were for 20 minutes? I know the stock's not moving.
No.
But you as a shareholder, did you feel more passionate about the company?
Well, Bill McDermott is the freaking man. Like, as an individual and as a salesman, he is a great salesman. Like, it's undeniable how he's done so well in his entire career. But again, ServiceNow is already owned by all of these enterprises, right? They're not accelerating revenue at the top line. They're not hitting a new set of customers that no one's ever hit in their entire lives. The fact that they're growing at 20% with everyone already having ServiceNow is pretty extraordinary. I think that's great. The problem is market doesn't give a shit.
Jose, your thoughts?
Yeah, really quick. I mean, I don't own the stock, but if I had a CEO like that, I actually would be happy. You could feel the passion for the company, and that's what you want. You want someone with passion. The only thing, though, is I feel like sometimes passion like that makes it seem like growth is the optics. The way I got it, again, this is the first time listening to him, but the optics and what I got was growth is coming, right? It's coming, and as an investor, I should be expecting it for it to come. So when you kind of give me a quarter that I don't get that growth that I expect, I'm gonna definitely punish the stock. So I don't know. He's telling us he's coming. I wish he would pause. I wish he would give us a time frame of when that's gonna be. Because then it's like, when is this gonna happen? Is it gonna happen next quarter or next quarter? And if you don't give me a time frame, I'm just gonna be like dancing around with my expectations.
I think that is fair. Tesla is not live yet. It will be in a couple minutes, and then we will go to them. Did anyone in the chat feel more inspired to buy ServiceNow after that? I mean, like, I don't think he was wrong to be that assertive and aggressive, and he should do that, especially when the stock is down. I just think it was throwing a lot of headlines about how great they are versus creating a coherent narrative around. I still don't think it should be trading at these levels, though. But I don't know. If he's going to do that, I think you need to have the camera on too. You know, like, you need to have video. You need to really make something out of it versus kind of just yelling into the mic about why they're so good.
He's got a very
But-
interesting Bond villain-like look to go with it. So he,
Yeah.
that would've been good.
You could be a villain. That's actually pretty funny. You could be a villain. Like the guy wears the shaded sunglasses all the time. I mean, those aren't sunglasses. They're the prescription. I don't know what those are, but
he's blind in one eye.
Oh, he is? Okay.
Yeah.
He's just quite a character. Like,
I mean, if from a communication perspective, reading the room, even if the stock was at 100, it's still down a lot. I think there would have been a different way to have those opening statements. Like, I'm trying to imagine how I would have like theoretically put those statements together. And the problem is when you're just reasserting, well, look what we did with Robinhood, look what we did here, look what we did. It's like, it's too much versus like actually talking to your investors. And that requires slowing down and painting a vision, kind of taking them step by step on the journey of what's happened over the past couple of months, and then like really communicating. Maybe it wouldn't affect the stock, but I feel like it would be more effective for shareholders to just feel that, ServiceNow is not going anywhere.
Is someone asked in the chat, should we be worried about Zeta earnings as a result of this? The difficult part is, look, these were actually good earnings. They missed on the guidance by a little bit, but it was still good guidance. And when you consider how much the stock has been down, it's a pretty big dramatic drop from it. So now Zeta reports earnings and their stock is up. I mean, sorry, their top and bottom line are up. Their guidance is up. I don't see why they will be down 13%, but it really just depends on how the market reacts to the stock. Like you can't really forecast how the stock market's going to react to something, whether it's really good or really bad.
Well, to Nate's point, if Zeta does accelerate growth, and that's what the market cares about, like beating expectations and really showing growth, then maybe they don't have to get hit as hard.
They did that last quarter and the stock went down.
No, the stock wasn't down. It was like flat. But all right, here's Tesla. Here we go.
Get ready for a big change in the
These comments are based
tone.
on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So I think we've got a very exciting year ahead of us with 2026. We're going to be substantially increasing our investments in the future. So you should expect to see substantially increasing our investments in the future. So should expect to see a very significant increase in capital expenditures, but I think well justified for a substantially increased future revenue stream. And obviously Tesla's not alone in this. I think you've seen most, if not all, certainly the major technology companies substantially increasing their capital investments. And we're going to be doing the same. I think it's going to pay off in a very big way. So we're investing in and improving our core technologies, battery powertrain, AI software, AI training, chip design, manufacturing, laying the groundwork for significantly increased manufacturing production. We are also strengthening our supply chain across the board, batteries, energy, AI silicon, everything. And laying the groundwork, like I said, for what we expect to be a significant increase in vehicle production in the future. And of course, a very significant increase, actually releasing Optimus, but increasing our internal production for testing, and then probably being able to have Optimus be useful outside of Tesla sometime next year. As you've heard me say a few times, I think Optimus will be our biggest product, not just Tesla's biggest product ever, but probably the biggest product ever. And I remain convinced of that conclusion. So on our vehicle side, it's always, I think, worth noting that a Tesla car is incredible value for money, and they're all autonomy ready, depending on what part of the world you're in. The supervised full self-driving is getting extremely good. We have just started production of Cybercab, and we'll begin production of our semi-truck soon. Now, I should say, whenever you have a new product with a completely new supply chain, new everything, it's always a stretched out S-curve. So you should expect that initial production of Cybercab and Semi will be very slow, but then ramping up and going kind of exponential towards the end of the year and certainly next year. And in fact, we'll be ramping up production of all vehicles in all factories to the best of our ability through the balance of this year. On the energy front, the United States and the whole world will need a lot of energy storage to meet growing electricity demand. Demand for our Megapack is very strong, and we're excited to begin production of Megapack 3 later this year in our new world-class factory outside Houston. For full self-driving and robotaxi, version 14.3 was a major architectural update, and we have a whole pipeline of major improvements to full self-driving that we believe will lead to unsupervised full self-driving being available anywhere in the world that it is legal to do so. And then there's a version 15, hopefully hopefully by the end of this year, but certainly by early next year. And that will be a complete overhaul of the software architecture, and will run on AI4. And that at that point we're really just increasing the safety level of FSD above human safety level even more. Meaning, I think even within version 14, we're significantly safer than human, but B15 will take that to another level. We've expanded robotaxi to Dallas and Houston using the same software source in the Bay Area. And the limiting factor for expansion is really rigorous validation, making sure things are completely safe. We don't want to have a single accident or injury with the expansion of robotaxi, and we have, to the credit of the team, not had a single one to date. And then Optimus, we're preparing Fremont for start of production later this year with Optimus. Again, totally new supply chain, totally new technology. So therefore, it's the production S-curve is always very slow in the beginning, but we'll ramp up to significant numbers next year. And we're constructing a second Optimus factory at our Giga Texas location, and that will probably start production around summer next year. The V3 Optimus design is almost ready to demonstrate. I think we want to just make sure it's like polished, like it works functionally, but there's some aesthetic elements that need to be finalized. And I think probably middle of this year we should be able to show it off. We're also a little hesitant to show V3 off because we find our competitors do a frame-by-frame analysis whenever we release something and copy everything they possibly can. So I think there's some value to, not showing new technology until it's close to production. Congratulations to the Tesla AI chip team for taping out AI5. That's going to be a great chip. I think probably the best AI inference chip for edge compute that exists. And certainly, unequivocally the best value for money. Team did a great job, and we're already have a lot of momentum for designing AI6 and we've begun to discuss ideas for Dojo 3. So this is all very exciting. We've also finalized plans for the chip fab, the research chip fab on the Giga Texas campus, and we'll start construction of that this year. In conclusion, Tesla is working on a lot of large, ambitious projects. They're all very challenging, but I think they're going to be revolutionary. And this is what the team does best: solve the hardest problems and build amazing products. And I'd like to thank the Tesla team for all the hard work, and thank you to all of our supporters.
Great. Thank you very much, Elon. And Vaibhav also has some opening remarks.
Thanks, Travis. So 2026 has had an interesting start, not just for us, but I think the world in general. On the autos business, we have seen a resurgence in demand in EMEA and certain countries like France and Germany showing over 150% quarter-over-quarter growth in deliveries. In APAC, we witnessed growth in South Korea and Japan, again, in terms of deliveries. Even out here in the US, we've seen a slight growth in terms of quarter deliveries. On the order backlog front, we ended the quarter with the highest Q1 order backlog in over 2 years. Whilst the recent increase in gas prices has had a positive impact on the order rate, this improvement started before the uptrend in gas prices. This is due to the work done by the Tesla team in bringing more compelling and affordable vehicles to market. 10 years back, when we launched Model 3 in the US with a promise of $35,000 starting price, which if you adjust today for inflation translates to about $48,000 in today's dollar terms, the starting price of Model 3 today is way less than that, while the product is way more compelling from where it started. Given this setup, we're focused on increasing our overall production volume, something that we already started in Q1. This volume increase is evidenced by the Giga Berlin reaching a record output of over 61,000 units in Q1. We plan to keep growing volumes further, not just in Berlin, but across all our factories. Our biggest limiter continues to be our battery pack capacity, and we are actively working on resolving that. Auto margins, excluding credits, improved sequentially from 17.9 to 19.2%. Note that we've had certain one-time benefits from warranty true-downs around $230 million and some relief on tariffs. We have not realized any benefit from the recent Supreme Court ruling on IPA tariffs, as there is still a lot of uncertainty around the final outcome. Both tariffs and sustained high interest rates continue to add to our automotive cost. Interest rate subvention costs are recognized upfront. If interest rates continue to rise, our cost of subvention will continue to impact auto margins. On the FSD adoption front, we continue to see improvement, reaching nearly 1.3 million paid customers globally. The bulk of the growth came from subscriptions, while upfront purchases only increased 7% as we removed the purchase option in some markets in Q1. We recently received approvals for FSD in Netherlands. This sets up us well for a EU-wide approval later in Q2, and we're just gated by how the regulators go about it. Additionally, we've also received approvals in China. The broader approval is still not there, but we're working with the regulators in the country, and we're hoping that we can get approval by Q3. With these approvals coming through, we expect the broader adoption of the software in the existing fleet and incremental demand for our vehicles. With all this in mind, we have evolved our vehicle sales strategy, where we now emphasize FSD as a product and vehicle as only the delivery mechanism. As we have noted previously, the energy storage business is inherently lumpy, tied to customer deployment timelines. In Q1, we deployed 8.8 gigawatt hour of energy storage, a 38% sequential decline. However, we still expect 2026 deployments to be higher than 2025. We set yet another record with gross margins in this business over 39.5% due to some one-time benefits from certain tariff recognitions of more than $250 million from certain tariffs which we paid in prior quarters. On a normalized basis, we continue to expect energy compression from here with increasing competition and tariff impacts. As previously discussed, tariffs in this business can have outsized impacts as most of the battery cells are procured from China. Our order backlog for this business is robust, and we're doing our best to build not just based on existing demand, but also on expected demand. Services and others improved sequentially from 8.8% to 9.2%. This includes a collection of efforts meant to support our customers like service centers, used cars, paid supercharging, parts sales, insurance, and even our robotaxi business. We're making deliberate investments in the infrastructure to help the robotaxi in the future. We grew the robotaxi fleet quarter over quarter, and we expect to keep ramping the fleet as we accelerate and get into other geographies. On operating expenses side, we did increase sequentially from a full quarter stock-based compensation expense for the 2025 CEO compensation plan, for which one milestone is still deemed probable. Additionally, our spend on AI-related initiatives, including expense on development of our own AI-5 chip and new products like CyberCap, Semi, Optimus, and MegaBlock, etc., continue to be at elevated levels, and we expect this trend to continue for the full year 2026. Net income was impacted from mark-to-market charges on our Bitcoin holdings, which depreciated 22% as compared to the last quarter, and the unfavorable impact of FX primarily from our large intercompany borrowings. On free cash flow, we ended the quarter with just over $1.4 billion. As Elon mentioned, we are in a very big capital investment phase, which is going to start now and would last a couple of years. So based on that, our current expectation for 2026 is over $25 billion of CapEx. And, just to remind you, we are paying for 6 factories, which we're going to go into operation. Some have already started, some would go into operation later part of this year. We're further increasing our investment in AI-related initiatives, including the AI infrastructure to support robotaxi and the launch of Optimus. We've already started placing orders for the research semiconductor fab in Austin and for solar manufacturing equipment. While this may seem a lot, and we will have the impact of negative free cash flow for the rest of the year, we believe this is the right strategy to position the company for the next era. We'll make such investments in a very capital efficient manner. We're actively working on our mission of building a future of amazing abundance. However, that requires not just a lot of investment, but an immense amount of execution. The future is going to be great, and the whole Tesla team is rising to the occasion to make this a reality. I would like to end by thanking the Tesla team, our customers, investors, and vendors for having confidence in us on this journey. Thanks.
Thank you very much, Vaibhav. Now we're going to go to investor questions, starting with a question from say.com. The first question is, when will we have the Optimus 3 reveal, which we already touched on. But the rest of the question is, when will Optimus production start, since we ended the Model X and S production earlier than mid-year? And then what's the expected Optimus production rate exiting this year, and what are the initial targeted skills?
Well, as I was saying, what we found is that when we've unveiled various Optimus versions, we found out how competitors literally do a frame-by-frame analysis and copy everything we're doing. So I think we want to push the Optimus 3 unveil maybe closer to production. Start of production is, we're assuming is somewhere around the late July, August timeframe. I mean, just to inject some reality into these questions, since these questions are not, whoever did this question does not fully understand what happens with the production line. The last SX production will be in early May, but you have to look at the entire upstream portion of the production line. So you have to start with, cells, battery packs, motor production, all the parts production, and so we've been dismantling the SX production line, from the more base level parts, the more basic level parts to, as you get to more larger sub-assemblies, you start dismantling the line from the small parts first, not from the final assembly first. So the final assembly line will that'll be dismantled next month, and after the last of the SX vehicles done. Now you can't dismantle some gigantic production line like overnight. It takes at least a few months to do so, and then you've got to install a new production line, and you've got to provide all of the wiring and communication, test out the machines of the new production line for Optimus. So that also takes several months. So frankly, if we're able to go from stopping production on one line, dismantling that entire line, reinstalling a whole new line, and turning that on in a matter of 4 months, that is an insanely fast speed. I don't think any other company on earth has ever done that before. Just to put things into perspective and inject some reality into the situation here. I don't know what the production rate of Optimus will be this year. It is impossible to predict these things. When you have a brand new product and an entirely new production line, and you have 10,000 unique items, all of which have to go right to ramp production, it'll move as fast as the least lucky, slowest, dumbest part in the entire 10,000. And this is Optimus is a completely new product with a completely new production line. So it's just literally impossible to predict. Except that I think it will be quite slow at first, as we iron out the 10,000 plus unique items that have to be sold for Optimus to reach volume production. Initial skills will be, obviously we're going to start with simple skills in the factory, and then build up from there.
Great, thank you, Elon. The next question is, what milestones are you targeting for unsupervised FSD and robotaxi expansion beyond Austin this year, and how will that drive recurring revenue?
Well, we certainly hope to have unsupervised FSD or / robotaxi operating, in, I don't know, a dozen or so states by the end of this year. Initially, we're taking it we're taking a very cautious approach to the rollout here. Like we haven't had any injuries and certainly no fatalities to date with the unsupervised FSD and robotaxi expansion. We want to keep it that way, and so I think probably unsupervised FSD or robotaxi revenue will not be super material this year, but I do think it will be material. It'll be material probably in a significant way next year.
Great, thank you very much. The next question is, when do you expect FSD unsupervised to reach customer cars?
I'm just guessing here, but probably in the fourth quarter. Um, it's difficult to release this like to everyone everywhere all at once, because we do want to make sure that they're not unique situations in a city that, particularly complex intersection, or actually they tend to be places where people get into accidents a lot, because they're just perhaps there's like I said, an unsafe intersection, or bad road markings, or a lot of weather challenges. So I think we would release unsupervised gradually to the customer fleet, but as we feel like a particular geography is confirmed to be safe.
Great. And the next question is, how will Hardware 3 cars reach unsupervised FSD?
Unfortunately, Hardware 3, I wish it were otherwise, but Hardware 3 simply does not have the capability to achieve unsupervised FSD. We did think at one point it would have that, but relative to Hardware 4, it has only 1/8 of the memory bandwidth of Hardware 4. And memory bandwidth is one of the key elements needed for unsupervised FSD. And it's just generally a thing that's needed for AI. If you're doing an order aggressive transformer, memory bandwidth is the choke point. So for customers that have bought FSD, what we're offering is essentially a trade-in, like a discounted trade-in for cars that have AI4 hardware, and we'll also be offering the ability to upgrade the car to replace the computer, and you also need to replace the cameras, unfortunately, to go to Hardware 4. So to do this efficiently, we're going to have to set up like kind of micro factories or small factories in major metropolitan areas in order to do it efficiently. Because if it's done just at the service center, it is extremely slow to do so and inefficient. So we basically need like many production lines to make the change. I do think over time it's going to make sense for us to convert all Hardware 3 cars to Hardware 4, because that's what enables them to enter the robotaxi fleet and have unsupervised FSD.
And for what it's worth, in the meantime, we're going to also release a V14 version for Hardware 3. This will be a distilled version of the same V14 software that we released for Hardware 4. And people should be able to start the drives from park state and basically have all the features that V14 for Hardware 4 has. And that's expected to come end of June.
Great. Thank you very much. The next question is, what enabled you to finish the AI5 tape out early? And were there any changes to the original vision? Last week, Elon said AI5 will go into Optimus and the supercomputer, but 1 month ago said it would go into the robotaxi. Has AI5 been dropped from the vehicle roadmap?
Well, the reason AI5 tape out finished early was because the team worked incredibly hard to make it happen. And just over time, we gathered a lot of momentum. But we did have to work every weekend for 6 months straight, including every holiday. So it was a lot of sacrifice by the team, and I was there, of course, myself every weekend. Fortunately, we didn't encounter any major. We didn't make any major mistakes that were, at least that we're aware of, that required pushing out the tape out. So the team just did a great job and worked incredibly hard is the reason. Yeah, I do expect that AI5 will go into Optimus and into the data center, because it's looking like we'll be able to achieve unsupervised self-driving with AI4 that is far greater than human safety levels. So, which means it's not certainly not immediately needed in the car. At some point, I think it will make sense for us to switch to AI5 in the car, but but there's not a pressing issue to do so. But at some point, the AI4 hardware is going to get like so old that it's like, okay, the only reason they're keeping the factory open is for AI4. We are planning an AI4 upgrade to use newer generation RAM. So it'll go from 16 gigabytes to I think 32 gigabytes per SoC, so a total of 64 gigabytes, and probably a 10% increase in compute in sort of into trillions of operations per second and in memory bandwidth. So that's AI4.1 or AI4 Plus probably goes into production middle of next year, I think. Depends. It's depends on Samsung's doing the modifications for us, so it sort of depends on when they're able to finish those modifications and bring it to production.
Great. The next question is, now that FSD has been approved in the Netherlands and is expected to launch across Europe this summer, can you discuss your robotaxi strategy for the region?
Well, we're probably jumping the gun here on robotaxi in Europe, since it is took us an immense amount of time just to get supervised self-driving approved in Europe. And these we don't control the regulators. It's we push as hard as we can, but it's ultimately up to the governments in Europe and the EU to decide what to do. Yeah, as it is, we've only been approved in the Netherlands. We expect to be approved in a lot of other countries. And I think the supervised FSD goes to Brussels for EU review in May. Yeah. So obviously, the next thing beyond that is to aim for unsupervised self-driving or robotaxi in Europe. I actually don't know what the time frame for that is, and would be somewhat at the mercy of the regulators as to when that approval would take place.
And from a technology standpoint, what we deployed in Netherlands and Europe is the same exact architecture and the training procedure and so on, except it had more Europe data. And I suspect the same thing will be true for unsupervised FSD as well. Whatever we use to solve in the US will work in other places in the rest of the world too, provided we were able to add the data from the local regions.
Great. The next question is, given the recent NHTSA incident filings, can you update us on the robotaxi safety data? If safety validation remains the primary bottleneck, why not deploy thousands of vehicles to accelerate removal of the safety driver?
Ashok, do you want to take that?
Yeah, we are increasing the amount of our QA fleet, but we also want to use the customer fleet to give us the useful metrics back so that we can scale it safely. Like Elon mentioned, we are absolutely focused on safety, and so far we have 0 incidents, and that's what the NHTSA filing also shows. In addition to safety, we are also solving some of these so-called scaling issues. For example, you do not want the robotaxi to be stuck blocking intersections, or don't want to be dropping people off at slightly incorrect locations and so on. So we are simultaneously solving the long tail of safety by monitoring the metrics across the entire Tesla customer vehicle fleet, which are is close to driving 10 billion miles on FSD in the next few weeks, and also scaling up the amount of QA fleet that we have across the entire US to accelerate our safety validation, while also scaling the rest of the factors that can throttle the increase of unsupervised vehicles.
All right. The next question is V14.3 still the last piece of the puzzle to enable large-scale unsupervised FSD and robotaxi, or do we have to wait until V15?
Well, no, I think 14.3 is last piece of the puzzle for unsupervised FSD. Now the question is like degrees of safety, like how safety and convenience, I suppose. We have a lot of known improvements, like major architectural improvements that we know would improve the probability of safety significantly. So I think it's not going to make sense for us to deploy, unsupervised FSD or robotaxi at large scale when we know that there are major architectural improvements to the software that can improve safety. So I think we're going to want to finish writing that software, validate it, and release it before going to large scale unsupervised FSD. Depending on what large scale means. I mean, we are, of course, as I mentioned earlier, doing unsupervised FSD in 3 cities, and we'll expand to, like I said, probably a dozen states or more later this year. So kind of depends on what your definition of large scale is. But
Yeah,
I do think it wouldn't be right for us to go to like very large scale unsupervised FSD when we know that there are software improvements in the pipeline that would improve safety.
Yep, and I'd like to note that the version of robotaxi that's running in Austin, Dallas, Houston, etc., those are essentially 14.3 variants, and it's obviously safe. That's why we're able to launch in those cities, and we continue to expand based on the V14.3 base for a while until V15 lands, and V15 is going to be a major upgrade.
Great, thank you. The next 2 questions we've already answered about robotaxi rollout and the data that we're observing. So we will end on the last question, which is what is Tesla doing to scale the energy generation business with solar? Residential roof deployments have stalled. Will Tesla move to regional solar and battery farms, perhaps coupled to superchargers? Will we deploy solar through utilities?
Yeah, the overall U.S. residential solar market is going through a bit of a correction after the loss of the homeowner tax credit last year, but we still see strong demand shaping up for the second half of the year. Tesla introduced a lease product this year that allows us to capture the tax credit ourselves and offer competitive pricing for homeowners. We've also debuted our own solar panel with superior performance and aesthetics, as well as our own best-in-class mounting system that gives us a fully integrated home energy ecosystem. We strongly believe that solar and storage markets globally will continue to grow at both residential and utility scale, and we will continue to invest in that growth.
Great, thank you, Mike. So now we're going to move on to analyst questions. The first question is going to come from Will Stein at Truist. Will, please feel free to unmute yourself when you're ready.
Can you hear me?
Yes, we can.
Great. Thanks for taking my question. Considering the various parties involved in the Terafab project, I'm hoping you can provide some details for investors about which party is going to take responsibility for each aspect of that project, funding it, designing it, building it, operating, taking production, and the like. We'd love to hear some more details.
Yeah, so we're still working out the details of the Terafab deployment. In the near term, Tesla will be building the research fab on our Giga Texas campus. This is something we expect to be probably, a $3 billion-ish initiative. and capable of maybe a few thousand wafers per month. But it's really intended to try out ideas, the research fab, both in terms of maybe we have some ideas for improving the fundamental technology of how chips are made, and there's some new physics we'd like to test out. But we also want to test out the ability to see if something is working in production. So you need kind of like a few thousand wafer starts a month to make sure that a production process is sound. And then SpaceX is going to take care of like the initial phase of the scaled up terafab, and that's what we've figured out thus far. You know, any kind of intracompany thing has to be approved by both the SpaceX and Tesla board of directors. It's got to go through a conflict resolution. It's going to have unfortunately, a lot of complexity because we've got to make sure Tesla shareholders are served and SpaceX shareholders are served and strike the right balance there. So it takes a while to work through the kind of independent director reviews on this. So that's basically what we've figured out thus far is Tesla's doing the research fab, SpaceX doing the initial part of the large-scale terafab, and then we got to figure out the rest.
Yeah. And what about Intel's involvement?
Yeah, so Intel is excited to partner with us on some of the core manufacturing technologies. So we plan to use Intel's 14A process, which is state of the art, and in fact not yet totally complete. But given that by the time terafab scales up, 14A will be probably fairly mature or ready for prime time. 14A seems like the right move, and we have a great relationship with Intel. A lot of respect for the CEO, the CTO, and the new team there. So we think it's going to be a great partnership.
Yeah, and the other thing on the research fab, I think we've said it before, we plan to do memory, logic, everything in the same place, including mask, because we want to have a quick iteration loop so that we can see and basically scale the technologies which we're trying to bring up.
Yeah, I think this will be unique in the world, or at least I'm not aware of any place where you have the lithography mask creation, and then logic, memory, and packaging in under one roof in one building. That's about the fastest I could possibly imagine doing recursive research and development, and being able to try out some pretty radical ideas, some of which have it's kind of long shot stuff, but if some of these long shots pan out, would be radical improvements in the way chips work.
Great. The next question is going to come from Pierre at New Street. Pierre, please feel free to unmute yourself.
Hey, thanks a lot for taking my question. A quick one first on FSD adoption. So you have 180,000 new users, paying users this quarter, and I compare that to your overall install base. It might be 15%, but then if I shrink that to the US or to North America, where most of them are, it's probably more like 30-35%. And I compare that, you probably sold about 100,000 cars in North America in the quarter. So you're winning twice more FSD users and you're selling cars. And then if I add to that picture the fact that I guess it's mostly hardware for owners who subscribe to FSD, it sounds like most drivers in North America who have hardware for would already be using FSD. Is that the right way to think about it? And the kind of like success FSD is meeting today? Is that the right way to think about it?
Yeah, I think you're thinking about it the right way, Pierre. And the other thing which I'll share is that, you know, you can't just look at one quarter versus the other quarter in terms of churn, but we are actually seeing churn of subscribers also coming down, which again is a reflection of the product is getting better. And obviously, if subscriptions are going up, that is a good metric. The other thing also to note is that we are seeing customers actually drive longer, which again, you could correlate it. That's why you have lesser churn because people are liking the product. And if, I mean, I've said this before, if I just use my own personal behavior, right? I literally get in the car, I press a button, and it just goes. And earlier I used to park, now I don't even have to park. And that is the experience which we want everybody to get. And that's why you're starting seeing it in the numbers come through.
Excellent, thank you. And if I may, maybe a quick follow-up, completely different. It's more on the Optimus architecture. And you talked about the partnership with XAI and Grok. And I was wondering if you can share with us anything about how the system to intelligence is going to be implemented. Is that going to be on board on chips inside Optimus, or if we should think about like your fleet of like 1 million Optimus being produced a year, actually driving very significant inference demand in data centers as well for system to thinking?
Well, we think we can put a lot of intelligence locally in the robot, and certainly needs to be enough intelligence that if the robot gets disconnected, like if it's a bad cellular signal or there isn't Wi-Fi, you know, Optimus can't just get stuck. It needs to have enough local intelligence that it can still do useful things, you know, even if it loses connection. Kind of like the car. Like the car does not need any cellular or Wi-Fi connection to be able to drive safely. Now, I guess you can think of like Optimus needs kind of a manager to tell it what to do. Broadly speaking, like if, you know, otherwise it's going to keep doing the same thing it did before. So, you know, I think you need kind of an orchestration AI, which, you know, Grok would be good for orchestration. And then for, you know, for Optimus's voice, you know, having a low latency, intelligent voice AI, Grok is actually very good for that. So if you want to talk to Optimus and have kind of a, you know, a Grok level conversation, you kind of need to connect to a Grok level AI for that. But I would expect the amount of interaction, apart from like, you know, the voice stuff and asking complicated questions of the robot that necessarily needs a large AI model to answer, you know, Grok would probably have about as much interaction with Optimus as a manager would have with the people on their team. So meaning Optimus could probably work for, you know, several hours without any management oversight.
Great. The next question is going to come from Dan at Barclays. Dan, please feel free to unmute yourself.
Great. Good evening. Thank you for taking questions. Elon, your chip suppliers generally generate pretty good economics on the chip they sell. Your approach has historically been on vertical integration. Part of that has been to get better economics. So I know the longer term goal of Terafab is to get the supply you need, but how much of Terafab is also motivated to get better economics on your midterm chip purchases? And how long is it going to take to ramp to get to a yield that achieves that type of economic parity?
No, I mean, Terafab is not some sort of mechanism to generate leverage over our chip suppliers. It's just literally we don't see a path to having enough a sufficient quantity of AI chips down the road as we scale production to high levels. Just the rate at which the industry is growing in logic, but even more so in memory, is just doesn't, we just anticipate hitting the wall if we don't make chips ourselves. So that's the reason for the Terafab. I think that we do have some ideas for how to make maybe radically better AI chips. And these are kind of research ideas that are, which means like long shot, but if long shot pays off, it's maybe a giant improvement. And it's just easier to do that if we have our own research fab and are developing our own production technologies. So, and if you look sort of long term at, say having AI satellites, making chips for those, there's no way in hell the existing industry can keep up with that. It's impossible.
All right, and our next question is going to come from Mark at Goldman Sachs. Mark, please feel free to unmute yourself.
Yes, good afternoon. Thank you very much for taking my question. I recognize the importance of FSD and that FSD can help to drive vehicle sales, and nice to see some of the improvements in the FSD technology more recently with version 14. However, I'm also hoping to understand if the company's view on new vehicle models has evolved. And I ask, given that Elon, you posted on X recently that Tesla could develop a family vehicle. There's also been some past discussion about a compact vehicle.
Well, I mean, Cybercab is the compact vehicle. It's actually, I mean, it's very roomy, but it's a two-person vehicle. And we do think probably most of our production long term will be Cybercab because 90% of miles driven are with one or two people. So it would mean that you'd want the vast majority of your production to be Cybercab. But over time, it's going to make sense for our whole lineup to be autonomous vehicles of different sizes. And I did talk a bit about this when we did the kind of AI day in LA at Warner Brothers, and showed like this is our current lineup, and this is what some idea of what our future lineup will be, which is that it's going to be almost entirely autonomous. In fact, long term, the only manually driven car will be the new Tesla Roadster. Speaking of which, we may be able to debut that in a month or so. It requires a lot of testing and validation before we can actually have a demo and not have something go wrong with the demo. But I think it will be one of the most exciting product unveils ever. I'm not sure. I don't think it moves the needle massively from a revenue standpoint. But it is very cool. I think it might be one of the most spectacular demos ever.
All right, Mark, did you have a follow-up question?
Yeah, thanks, Travis. My other question was on batteries, and the company mentioned batteries as a constraint on its growth. Can you speak more to how Tesla expects to resolve this, and to what extent that might come from ramping up your own LFP and 4680 battery cell manufacturing, or is this something that you'd expect to resolve primarily with increased sourcing from suppliers? Thank you.
Yeah, so at the moment, I think the limiter is not the cells itself, it's the battery pack capacity. And, we're, like I said in my opening remarks, we're actively working on resolving this. There's more capacity being added as we speak, and I'll let Lars add a few more things to it.
Yeah, thanks, Vaibhav. As you guys may have seen in Berlin, we started launching a Model Y battery pack with our in-house 4680 cells a few months ago, and that is ramping up nicely, adding to Berlin's output and helping with the demand surge that we've seen in Europe as well. We're adding additional capacity in our Reno facility, sort of retooling it as it's been building packs now for, almost 10 years. And in order to put in some more efficient lines and get, additional output out there. And then, we continue to have growth in China as well. ramping in-house LFP module production and battery packs associated with that. So all of those things are happening now and in the next months, and that's really plans we laid out a few months back to increase that output with the growing demand.
All right, thank you guys. And our next analyst is going to be Colin from Wells Fargo. Colin, please feel free to unmute yourself.
Oh, great. Thanks for taking my questions. You moved the safety driver in Austin, and you're now expanding in Dallas and Houston. What are the key safety metrics that you're tracking that gives you confidence that robotaxi is safe enough to expand? Is it sort of miles per intervention, miles per accident, per fatality, and where do you stand on that now?
Yeah, we track basically all the metrics that you mentioned. We have a pretty large QA fleet spread across all of the United States, and then we look at any intervention that could happen, and then sort of simulate both in practice and also in our simulators that are very, very good nowadays using neural networks as what would have happened. And then based on all these analysis, we in the end make the call to expand. And so far, all of the expansions have gone according to our expectations.
Yeah, I should say, like, a lot of what limits wider deployment of robotaxi are actually not safety issues, but convenience issues, or the car basically gets paranoid and gets stuck. Like sometimes it gets, because it's programmed for maximum safety. So the problem is that then it sometimes just gets scared to do things. So
Yeah.
like it sometimes gets scared to cross railroads, for example, or it'll get stuck at a light where there's the light never changes from red. Or I mean, there was one kind of amusing situation where a whole bunch of robotaxis got stuck in the left turn lane in Austin because, I kid you not, a Waymo had crashed into a bus. And so they could not turn left because the Waymo had crashed into the bus. And so you had this like long line of like, I don't know, a dozen or more Tesla robotaxis that were waiting for the bus to move, but the bus was never going to move because the Waymo has crashed into the bus. So that obviously drives people crazy if there's a whole bunch of robotaxis blocking the whole road. So it's a ton of things like that. That's the single biggest thing is just the car being scared to move or getting kind of stuck in situations like that. We've also had literal infinite loops where the car might want to make a turn into a road, but there's construction, and then it goes around the block, tries to turn into the road with construction, goes around the block, tries to turn the road. And so you have to stop the infinite looping, the literal infinite looping. So those are actually, and those are by far the issues that we have to resolve, as opposed to direct safety issues.
Got it.
Great.
And then
did you have a follow-up, Colin?
Just last year I asked about FSD and camera and the issues with sun glare, and you noted that there was a breakthrough with direct photon counting that addressed this issue. But a month ago, there was a NHTSA filing saying that they haven't received an update when the solution was deployed and the number of vehicles. Did it require a retrofit of the camera? Is this fully deployed? I guess I was just curious since the filing mentioned it.
Yeah, first I want to say we did, change the cameras some months ago, and those are out. And the NHTSA flying is referring to like older vehicles. We always work directly with NHTSA on all of the issues that they raise with us, and they're asking for quite a bit of information, and we're complying with that in as timely a manner as possible. And so we expect to resolve that and any of the other investigations in short order.
Yeah, and we have also implemented stricter measures for the visibility of the camera. So in recent software builds, if the camera is not able to see things clearly because of residue buildup or whatever, then the FSD won't be available for those cars.
It just needs you have to clean the inside of the windscreen.
Great. That unfortunately is all the time we have today. We appreciate everyone's questions, and we look forward to talking to you next quarter. Thank you very much, and goodbye.
From up 4 to down 2.5%.
I genuinely was not sleepy before that call. I don't know what it was about it. The energy just wasn't there for me. Like Bill McDermott had a lot of energy, even if it was like angry energy. Elon had almost no energy. And the guy's probably tired. He's running many trillion-dollar companies, trying to get one of them to go public. Like, I get it, but that one was lacking some energy. Sam, what was your reaction to this call?
Every time I listen to these calls, I never expect anything crazy out of it. As a Tesla owner, it's exciting to hear that he's going to be upgrading AI4 in the vehicles. He did give I don't want to say a timeline, because his timelines are like always between now and like 10 years from now, right? He did say that Optimus is going to be pushed into production in July, which is cool. They're going to be dismantling the Model S and X production lines in the next couple of months. But yeah, his timelines are like, throw a football out there and maybe we'll get there when we get there. He's very optimistic with his timelines. But, the stock was up 4%. It's down 1%. It's going to open up flat tomorrow. Option sellers win. Besides that, every time I hear him talk about the future, and this is the reason why I like Tesla as a company so much. I think it's one of the most innovative companies in the entire world. It reminds me of iRobot with Will Smith. And just kind of imagine that is the future. It sounds like Elon wants to head to, where you have a driverless vehicle. There's no steering wheel at all, not just with robotaxi, but with all vehicles in general. That'd be really cool, but there really is nothing special that came out of the earnings.
Tanner, your reaction? They guided for negative free cash flow for the year. How are you thinking about this one?
Sorry, I was muted. Yeah, I mean, it was all right. I think that the stock is having an overreaction. I think the quarter was still good. Record Q1 order backlog. They continue to make forward progress, but I think it all just goes back to the valuation that people are willing to pay for things like slowdowns or maybe not being as good as what people initially had imagined. And then you look to a 350 PE and then you're like, okay, well, maybe this is a little expensive to be paying this. And so they can't do anything but blow our expectations away at these types of valuations. That's at least why I don't hold it. Is obviously the upside is really exciting, but any bit of downside, you start to realize oh, okay, wait, this is expensive.
Yeah, you buy Tesla when no one wants to own Tesla. That's when you buy it, right? When the whole Trump Elon thing was happening, that was when you bought it, Amit. When people thought when people expected it to be the worst possible quarter, when it was $150, that's when you buy it. Buying Tesla in the midst of all the excitement is probably not the best time to buy Tesla from buying the best price of it. And you just got to hold on to it.
Jose, your thoughts?
Yeah, I mean, it was complete shift to what we were just listening to with ServiceNow. As a semiconductor and AI investor, there were two things that came out that really got me excited. The first thing was just hearing more about the Terafab and more the reasoning. He explained it already before, but it's just he doesn't see that with the amount of supply lines that we have right now and upcoming in the next 4 years is going to be enough to supply the demand that the AI is going to be providing. So to me, that just brings excitement to the whole industry. It tells me that this cycle could last a lot longer than historical cycles. It might still be a cycle, right? But it's just a longer cycle than others. And the second thing, it did seem like he pre-ran an announcement from Intel. He did announce that Intel, they are going to be using Intel's 14A process node. And previously, Intel has said that obviously they're working on it, but they're not going to manufacture until they get real customers and real push for it. And Tesla is a real customer, and so we saw Intel stock was up a bit. I think 4% when I first saw, but it seems like it might be giving back some of those gains. So Intel investors are probably pretty happy there. But then you see the other thing is Elon's working with all these chip players, right? I think Samsung built some of their chips. I'm gonna guess TSM might do some stuff, and now they're working here with Intel. So yeah, I think just bullish for the semiconductor and AI sector for me.
Okay, so I read a theory while Elon was talking. I don't think it's a good theory, but it's a more entertaining theory than that call, and it's probably more entertaining than any analysis anyone can give on the call. It's probably a crappy theory, but still. What if his low energy is because he wants the stock to tank so that SpaceX could buy it on the cheap and do the merge without having to pay like a $2 trillion valuation for Tesla? Does anyone believe in that?
I mean, he's got a pretty sizable amount of equity in both. It'd be like, I don't know, hurting yourself on one side to benefit the other side, or something along these lines. Like, I don't know.
Do we think Elon's distracted at all by SpaceX?
Yeah, he has way more to benefit from SpaceX than Tesla now.
At least he's not running the Doge department like that. That was the ultimate distraction, right? And him not doing that was probably the most bullish case at the time for all of his stocks and companies. I mean, here he's just being Elon. Like, this is what he does best. He loves it. He loves to run all these companies, do all this stuff. I don't think he's like intentionally trying to bring the price down, but
yeah,
when you're the richest man in the world, yeah. When you're the richest man in the world, I mean, I don't know. He's got plans.
It was more so someone tweeting it because they couldn't believe how bad the energy was. And they were like, well, what if, it's kind of a joke, but it's like, I think the guy's distracted because there is a big IPO that he knows he needs to get done because a lot of people took a shot on SpaceX in 2008. They want to get liquidity. Elon needs to make sure that the company officially goes public, establishes his compensation package. He gets the terafab, at least the foundation for the terafab to become real, which would require a lot of SpaceX funding. So like, it just feels like the energy we got from the call today was a distracted energy, but granted, the past couple of calls have not had a lot of good energy.
This has been his energy.
Yeah, agree.
But I think a merger is definitely going to happen. I am a believer in that. I don't know if it's going to, like, probably in the next 5 years or something. And in terms of being distracted for Elon, I mean, this is not his first time running two companies. Like, we have Boring Company, Neuralink, X, like all of these things. He's pulled in all directions at all times. Now, the biggest IPO in history is obviously a big deal, but I'm sure he's still giving Tesla his attention. But yeah, he's a tired man.
All right, that's what we got. Sam, I know you got to leave. There's Sam's Twitter right there in the chat. You can follow him there. Thanks for popping on, man.
Last thing, that was a really cool comment you pointed out, Jose, when Elon Musk replied to Sundar Pichai saying TPUs are underrated. That was a really cool comment and very validating for it. Yeah, I saw it. Oh, sorry, my bad, Tanner. You're pointing over there. I'm like, you're not pointing anything. My bad, Tanner. You said that. I apologize, but no, that was really cool. They said. Anyway, guys, really appreciate being on here. Thanks for inviting me. Talk to you guys later.
See ya. Later. Yeah, I was actually going to bring this up. He mentioned the TPUs are underrated, giving Google a little boost, and then crapped on the Waymo in the call, sharing on Google a little bit. They have a complex relationship.
I think the broader takeaway, and Sebs, thanks for the super chat. It seems like a merger to form Musk Industries is inevitable. I think the broader takeaway is that there is so much demand for compute, and Elon's talking about 100 terawatts of compute, which is 100,000 gigawatts annually inside of his SpaceX compensation package. I mean, that's just for one company. So I can't even imagine what it is for all the AI companies that are out there, which means long NVIDIA, long SMH, long AMD, long Broadcom, and long Google, long Amazon, right? Long this
long
tech
Jose.
revolution. Long Jose. There you go.
Yeah.
Question on, I don't know if maybe you guys might know, I don't follow it too much, but when he mentions the space compute, is he talking more of just like satellites in orbit, or is he actually talking about kind of data centers in some form of lunar or Mars place?
You think Tanner and I can answer that question?
Let me handle this one a minute.
I have
think
no
maybe
idea
it's
what
coming,
you
though.
mean by
Star Cloud's going to be a real thing.
Yeah.
But what is Star Cloud? Like, if you had to describe it in space, what it like?
Orbital data centers that are powered by solar, and
Yeah, but what is an orbital data center?
just floats around up there. I don't know, dude. I'm not an astronaut. I'm just, they
No, but like when people say data centers in space, you can't just shoot a GPU into space. Like, how do you like? How does this?
Well, that's
even
what
work?
That's what SpaceX's whole business is. They shoot stuff into space.
No, but shooting a satellite in space is different than running a AI workload on a GPU in space. I would imagine there's a reason we're renting out all these properties across the entire world and hooking up data centers into server racks. That's why SMCI, Dell are in business. Like, how do you just put that into space?
Okay, so one, NVIDIA already has GPUs up in space right now.
It's a very minimal amount, though. Jensen
Very
is
minimal, but
I think it's just one.
yeah, but there's hold on now. Help me out here, Jose. So you could load up a lot of GPUs. I mean, the hope is that we get a ton of payload into space. I'm not saying like this is going to happen next year, but I think that this is the sort of multi-decade goal to potentially get data centers into space because it's much cheaper to run.
Yeah, I guess physically I was trying to or just imagine like what does this look? Is it like a lot of satellites put together, or is it like a data center like we see here on Earth, kind of built somewhere? Like I don't know if you guys, if you had a sketch, if you had an AI image made by Grok of what this AI with this compute in space looks like.
No, what the actual image that I would share, Amit, is the videos and images from Star Cloud. It's one of the fastest growing Y Combinator startups. I think it is the fastest growing Y Combinator. And they have a vision for
Yeah, so I seen their vision. I didn't know if that was Elon's vision too. Like if that's the vision he was following of just having like
part of their
massive.
Part of Star Cloud's journey is they booked real estate on SpaceX rockets to get data centers to space. So yeah, that is a SpaceX rocket.
So in theory, this is like what when we think of a data center in space, this is what we should imagine, opposed to like a building in a warehouse with GPUs kind of sitting through. Is I guess that's all I was kind of really thinking of. How can we imagine this?
This is their vision, and
Yeah,
right
this
now
is
I
data
think they are
This
the biggest.
seems so hard to do. Like if they figure this thing out, yeah, SpaceX is going to 20 trillion. If they can launch data centers in space in a realistic way that actually work, obviously it would be way cheaper, way better margins. You would have to deal with the asteroid belt and a lot of that, but like still, if they figure it out, well, I guess that's the story for the IPO, right?
That is the story for the IPO. I just think honestly, if I do believe that these types of really ambitious goals will come to fruition over time, hopefully in my lifetime. The problem is that whenever the valuations get so excited because people do see that potential too fast, that's where bubbles are created. Like the dot-com bubble wasn't a bubble because the internet wasn't feasible. It was just the valuations were too big too early. Like we needed real infrastructure, real setup before any of this stuff was going to come to fruition. But people could anticipate a day where payments were done online, banking was done online, people would deliver things to your house directly. And that came. But, Cisco, as being the largest company in the world back in the late 90s, was just way too early for what, we could potentially see 20 years later. So I think that the space economy is real. I think that 2 trillion is a lot for right now.
Yeah, people get too excited for the short term and forget it could take a lot longer of when this technology will happen. But I also think this is why Jensen, and I know we're gonna get off soon, but I have to mention Jensen. Me and him are boys, right? He was really smart with he saw AI coming, and what he ended up doing was making sure that the AI infrastructure was there for it. And even with the planning and kind of investing in all these neo cloud players and all this AI infrastructure, we are still compute constrained. I can't imagine what world we would have been in this AI race if AI was moving at this direction, but we didn't invest in these neo clouds or all this AI infrastructure 2-3 years ago. Like how slow will production have been? So I mean, I don't know. That guy's genius.
What is your thoughts, Amit, being the only person here that's actually talked to Jensen multiple times?
No, I think Jensen, when he was asked about space-based data centers, he downplayed it and said, I mean, on that Lex Friedman podcast, he was like, if I knew people were this excited about it, I would make a bigger deal about it. So it was a stark contrast to Elon kind of painting this vision that it's going to be the next big thing. Whereas Jensen was like, it's really hard to have space-based data centers, liquid cooling. I guess you wouldn't use liquid cooling, you would use regular cooling. Like he basically said it's going to take some time for that to become a thing. I mean, people were saying, they were saying that there's a bear case for Nebius because of SpaceX's orbital data centers. I was like, what? Like Nebius, Corey, Viren, like they're selling out as much as capacities they can get. SpaceX is not going to be a bear case for that. So yeah, I don't know. I don't think it's realistic right now.
We live in a super interesting period right now, and I can't imagine being a value investor. I like, honestly, I can't. Like, I think being a growth investor is just like the only way. Are you guys not seeing what's happening? Like,
I can't imagine investing in companies that just produce a digital platform or something like that.
Oh, okay, come on now. You don't want to see you in real life. Like, I'm going to see you again. You better watch your tone, okay? I bought you breakfast. We shared time together, and you're stabbing me in the back like this. SoFi's a cool company.
That's because we're boys, right? If I was only nice.
It's so true. I talk so much shit on Amit, and then people give it back to me, and I'm like, I can't handle this.
Dude, literally, if any of us even like for fun throw jabs at each other on our own streams, the chat just freaking rats us out on the other. They're like, did you hear what Amit said? Did you hear what Tanner said about you? I'm like, I'm sure he was joking. They're like, no, man, he hates you.
No, he really hates you. I'm offering Amit a place at my house to be like, hey, man, come on over, stay. No, I love the jokes.
All right, that is it for us, folks. Thank you all for being here. If you're on my channel and watching and don't follow Tanner, there's his YouTube. I'm putting Jose's YouTube in the chat as well. We got a big one next week, April 29th. We got SoFi in the morning, JPow in the afternoon, and then Microsoft, Meta, Amazon, Google will probably all be live for that as well. So that's going to be a pretty big day. And hopefully we can keep this bull market going.
Yeah.
All right. That's it. Any last words?
No, should be an exciting next Wednesday. Don't worry, Jose. You don't have to wake up early like me. You can. All the tech companies come after hours, so you're good. I'll be up in the morning.
Wait, is it Wednesday they're here? I think I'm on vacation.
Dude, this guy's always on. How many vacations do you take?
When the little one likes to travel.
He's really living life, bro. Every month, this guy, or at least every other month. I love it. I'm happy for you, bro. It's just goodness.
Yeah. That's what being a semi-investor does to you. You can just go on vacation the whole time.
Every month. There you go. All right. Thank you, everybody. Appreciate it. See you guys tomorrow. Thank you all for joining.
Bye, guys.